who knows. In fact, some basic indices are actually coming off from those support levels very, very well. PSU banks are a case in point. They've started to rally after hitting some key support zones. So in some sense, we are not at resistance lines, but at support lines for a bunch of sectors, and you got to keep that in mind. And the SMID rally seems to be very, very intact and may continue to be stock specific. Now, here's some trivia, guys. And how have mid caps rallied in the current calendar year? And you got to think of it. It's astounding, the rallies that we've seen while the Nifty is flatlined or actually come off quite a bit. The top YTD gainer on the NSE, and therefore not just the Nifty 50 but the broad NSE, has rallied 500% YTD, and that's only what, 8th of June thus far, or 6th of June until last Friday. Sterlite Tech is up 500%. The 10th highest YTD gainer has rallied 135%, which is Aditya Infotech. Think of it. I mean, I'm not talking about the top gainer. In a year where the Nifty's come off, the 10th most gainer has actually rallied 135%. And 46% gain is the least that the top 100 stocks have gained YTD. In effect, guys, the 100th best performer on the NSE is up 46% in a year where the Nifty's come off whatever 10-15 odd percent. So, you know, there's so many people talking about how there is a bull market in the SMID space. It is actually true, and this is not even the full year. This is only the first 5.5 odd months that the rallies have taken place.
So it's a sort of a parallel universe that is going on within the markets as well, and it depends on the composition of your portfolio. You might have some investors who've actually not had it that bad.
Yeah, the market is not the Nifty 50.
Definitely, but even among the broader space, it's not necessarily that all of it has run up. So if you've picked well, then maybe you're not feeling as bad as everyone else. Well, in terms of factors, very clearly, this escalation in the Middle East is a problem. I know US President Trump is going around talking about how he's trying to control the response from Israel, but frankly, it's also highlighting to the street, to investors, about how there is very little control. The impression so far was that there was much more control that the US had over Israel's actions than it seems to be. So that is going to be one pain point. On the Brent side, I think we have $95, $96 levels, if I'm not mistaken, right now. The tech rout last week is also a pain, and that can actually go both ways as far as India is concerned. But the fact that it wasn't just tech stocks in the US that were sliding, right? It was everything, all asset classes. That will have an impact on Indian markets, at least as we open. Liquidity concern on SpaceX is also giving weak opening signals. Asian markets, especially Nikkei and Kospi, taking a big tumble. So you will see that gap down on the opening, likely for the Nifty. Key support levels at 23,000 to 23,100. For the Bank Nifty, impact likely to be lesser than Nifty support range 53,700 to 54,000. Oil-led sensitives to be in focus in the day's trade. Domestically, the concern will be moderation in GDP for the next quarter. FII shorts at 92% versus 91%, still near the highest level since the budget. And we, of course, saw FII selling on the 8th day in the cash market. I'm just going to quickly go through a CLSA note on the moves that took place on Friday, because, that may still have some bearing over the next few weeks. So CLSA says the rate hikes look farther now after what the government has announced in terms of encouraging FPI investment and those tax cuts for foreign investors into Indian debt or Indian government debt. They're saying multiple measures have been announced to support the rupee. GDP growth projections trimmed down with upward revision for inflation. Very difficult to ascertain the amount of potential foreign capital due to these measures at this stage. They expect RBI's growth projections to be revised down with higher inflation. So maybe that will give some momentum. I don't know, guys. Do you think that we could see, after this initial sharp cut, maybe a better closing? Because at some point you have to look at US futures are ticking back up on the one hand. Yes, Brent has increased, but it's not manic. And India doesn't have these semiconductor stocks which everyone wants to sell off. Yeah. So the penny has to drop in our favor at some point. Do you think we could see maybe a better close than opening?
Yeah, and the technical factors are also in favor. Like the FI long short is not like skewed against us. So very likely today, tomorrow, whenever, but yeah, very likely.
And there has been a relative underperformance to this point.
Yeah, I would say watch out for IT stocks. One more interesting development was the likes of Anthropic also talking about going into new areas, including providing services, which shows that even your innovators on AI realize that you need that IT services bucket to actually implement what they are creating for large corporations. I think you might see another good day in IT. Perhaps watch out for that. But let me go across to Puneet now, joining us for the F&O setup this morning.
Well, thank you for that. It's definitely been a lot of action since Friday evening going into this Monday morning, and the implied open continues to be showing a pressure on the index. We might just kiss that, just a tad below that 23,000 mark, probably see some buying after that, but continues to be a very, very important Monday morning, this one. In terms of Bank Nifty also, you had multiple key aspects in terms of commentary as well as measures by the RBI. And that index did end on a positive note, and that was something that we were watching out for, right, in terms of commentary rather than rate action, and continued to be very interesting at 54,500 odd, still in the middle of that 2,000 point range that we've been talking about, between 53,200 and 55,500. So there needs to be some more work done in terms of what could be the next key trigger, but maybe with what we've seen sell off in the AI companies, maybe foreign investors start looking back again, and that could be a potential trigger for the Nifty Bank in the near term as well. Cash market, yet again, a big sell number there by foreign investors, and the index long also remains to be extremely depressed at just 8.1 odd percent. It's fallen from that 8.7% mark, but essentially 92% short positions still being maintained by foreign investors at this point of time. And the open interest distribution also is starting to show what we are seeing in terms of the index level. So, over the last week, we saw all levels about 23,500 continue to have strong call action. But as we continue to recede towards that 23,000 mark, you might see the middle levels actually get activated for the call. So all these red bars, which continue to have higher call interest, might just start to proceed closer to that 23,300, 400 odd levels. While for the puts, what we've seen is, compared to last week, sell off at the 23,500 mark, more active open interest being built at 23,000, 23,200 at this point of time. So this will continue to show you the pressure that we're seeing on the index, and as of now continues to show that as well. Finally, stock specific action, there wasn't too much because the OI change very limited both for the gainers and for the losers. So as you guys rightly said, a lot of pressure at the start is what's expected. How quickly and hopefully we see the follow-on buying will be something to watch in today's trading session.
Yeah. Okay, I don't know how much help it is going to be talking about individual stocks today, to be honest, but this is what is on our watch list, and my watch list starts with Ixigo. They're going to be buying a 54.66% stake in Breviste Hospitality for about 65.7 crores. They have the right to acquire the remaining stakes in future. Following this acquisition, the combined hotel network that they will have will comprise over 10,000 directly contracted hotels. Key synergies include driving higher occupancy and monetization opportunities. It also will unlock cross-sell opportunities. So it's an interesting move right now, which is why the thumbs up. KNR Constructions, this also was an interesting development, or a good development for the company. Their joint venture has got a 3,361 crore letter of order from Southeastern Coalfields in Chhattisgarh. It's a deal for 2,920 days. Order is a coal mining contract at the Kusmunda project, and the company has a 51% stake in the joint venture. That's KNR Constructions. 49% stake is with Sushi Infra and Mining. Key job works include drilling, mining, ancillary activities, loading and transporting. Why it's important, the joint venture order win is almost near the market cap of the company. So it's a large one for this company, which is why watch out. Amber Enterprises is the third one. Their subsidiary called ILJIN has formed a strategic collaboration with Singularity. That's Singularity Des Electronics Private Limited. The joint venture will carry the business of electronics in the field of medical, defense and aerospace. Ilgin will hold 60% stake in that joint venture. 40% is with Singularity. They will build separate centric platforms to build a strategic portfolio in medical, defense, and aerospace electronics. And it marks a deliberate move into higher value segments. I thought this was an interesting announcement from Amber, and would actually be pretty keen to speak with them and talk to them about this new venture and where they want to go from here.
Very interesting. NIBE is this first stock on my list, and it's an interesting update. This is from the DPIIT, which is essentially the Department for Promotion of Industry and Internal Trade. They have granted an arm of NIBE a license for the manufacturing and proof testing of firearms. The arm, of course, is NIBE Defense and Aerospace. The license expands the arm's capabilities across defense manufacturing value chain. And what can they do? Essentially, they can now develop advanced tech as well as precision engineering systems for arms of caliber above 12.77 millimeter. So it is an interesting stock to watch out for. The stock was up as much as 6% on Friday as well. You can watch out for it at the start today. Relatively small stock, Creative New Tech, sub 1,000 crore market capitalization and very low float as well. So bear that in mind at the start before I tell you about this. It is a significant order that they have gotten, advanced work order from BSNL worth 3,194 crore rupees. The order is for the BharatNet Middle Mile Network project in Odisha, and it's for the design, supply, construction, installation, upgradation, and operation and maintenance work of that network in Odisha. So watch out for this one. And EMS, finally, another relatively small company, sub 2,000 crore market cap, has gotten an order worth 103 crore rupees. This is part of the UP Jal Nigam project, or it's basically for sewerage work that has to be completed over the course of 24 months. A lot of these small orders coming through.
Yeah, but 3 large order wins today, right?
Yeah.
So therefore, all 3 would be very exciting to watch on open today.
Yeah.
Fourth is a potential order win, simply because the West Bengal CM in one of the speeches has cited the possibility of 1 lakh crores worth of railway projects in the state of West Bengal soon. And therefore, keep an eye out for Titagarh, Texmaco, Jupiter Wagons. All of these could be in focus yet again today. Remember, these are these are not announced orders. There's a possibility, but it may help the stocks in the session today. So keep an eye out for these. Keep an eye out for Z Entertainment. The board is going to consider an equity fundraise on June 10th. Now, the market is rife with talks of the promoter likely to infuse capital at this equity fundraise meeting as well. And we know that the stock has had a really strong run the last few days. Look at the 1 week chart, and Z has actually been smelling like roses, if you will. So keep an eye out for Z. Already a bit of a rally has happened. Could there be a cool off? Maybe. But for now, it does seem that the stock has some wind beneath its sails, and therefore the announcement until June 10th could well keep the stock in news. So watch out for this one. And I think the promoters of the IT companies have been saying about this for a long time. One of the analysts has finally written a note on it. Remember, I think Mphasis CEO wrote a piece in one of the magazines saying that when Anthropic announced its IT service offering, the market got it backwards. And his point was that this vindicates the need for AI service companies. And I think CLSA on that piece has written a note saying that the sector is alive and may not be kicking for everyone, but definitely for aggressive managements. CLSA says that service arm launched by Anthropic and OpenAI signifies a shift towards achieving deeper integration within enterprises and significant opportunity for system integrators to help enterprises on AI. So they've noted down a few companies they believe Persistent and Coforge with limited legacy managed service businesses are clear beneficiaries of this trend. And they believe that Tech Mahindra, Cognizant and Accenture will likely gain market share amongst the large caps, at least in FY27. So maybe not all lost, and maybe some of these stocks, whenever the IT sector decides to bounce back, might actually bounce back as well. Let's see, maybe it starts as soon as now with the AI plays coming off. I mean, what do people look at in tech? And maybe in India, considering that the valuations are cheap, Indian IT. let's see.
Yeah. I would second that. I think Indian IT is something that we should watch out for, and which is why I mentioned it. CLSA's peaks are also interesting. They've not gone for your top 3, top 4. They're talking about how aggressive the managements are. So IT bosses will have to sing for their supper now and actually talk about what is happening instead of coasting along on what they've built so far. All right, we've been talking about a mix of global and domestic factors today, and how do you avoid talking about SpaceX? It's gearing up for what could be the largest IPO in market history, aiming to raise $75 billion at a valuation of $1.75 trillion. Mahima joining in, not just to talk about SpaceX, but I think the question on everyone's mind, Mahima, if you're an Indian investor, how do you get a piece of the pie?
Right, so Tamanna, as you rightly mentioned, right, this is one of the largest IPO that the market's history will see. And if we take a look at the details per se, the offering price is around $135 per share as of now, and the total raise is around $75 billion. The valuation is as high as $1.75 trillion, and up to 30% of this IPO shares is reserved for the retail investors, which is not the case in general. It's around 10% mark, but for this IPO, it has as high as 30%. Now, what does SpaceX do? Well, it's into 3 segments. The first segment is space, where around 650 total launches have happened till date. The second one is connectivity. We all know Starlink, where around 9,600 plus Starlink satellites are there in orbit, around 10.3 million subscribers as of March 2026, and 164 countries with coverage. The third one is the AI business that came, that came to be a part of SpaceX is with the acquisition of X, which is formerly known as Twitter. So both X and Grok are a part of this segment. Now, if you take a look at the financials, it's an interesting one because at such high valuations, the company is still sitting at a loss of around $4.9 billion as of 2025 ending, and around $4.3 billion as of Q1 2026. So that's the area of concern where SpaceX stands, because still running into losses in all 3 segments, not just one segment. Now, if you take a look at the other key financial details as well, the long-term debt for this one stands at around $29.1 billion as of March 31st, 2026. In terms of use of proceeds, it's going to be used for expansion of AI, compute infrastructure, plus launch of infrastructure and vehicle enhancements, and satellite constellation scale-up as well. Now, if you take a look at the valuations, like I said, valuations are beyond understanding as of now, because overall, SpaceX stands at a revenue of around $8.7 billion with a price to sales of 94 times, versus that of an Apple at 8 times and Nvidia at 25 times. Although this is not an apple-to-apple comparison, but still, such big companies with such big revenues, still the price to sales is much lower as compared to where SpaceX goes. Lastly, in terms of the recent rules that were changed by NASDAQ for inclusion of such big IPOs in the NASDAQ 100, well, now earlier there was a 3-month waiting period before these IPOs get included into NASDAQ, but now it could be as early as just 15 days. So now the question, as Tamanna was mentioning, as to how Indians can, be a part of this. Pre-IPO, of course, if you have an international broking account, that is one way. But you cannot, of course, go ahead and subscribe to IPO. Once the company gets listed, you can either buy the stock, or once it gets included in the NASDAQ 100, you can either own the index fund or the ETF, and indirectly you'll be owning SpaceX via that. So this is the overall view of the entire, IPO details of what one should know before investing or being a part of this IPO.
Okay, maybe it's not a bad idea to buy post-listing for SpaceX, but you have no choice as Indians. Thank you so much for that, Mahima. That was very, very educational, because this is what people want to know. Yeah, you don't know what's happening here. Chalo, SpaceX pe paisa laga hai.
Yeah, I mean, it's newsmaker, right? I mean, you think of what is the biggest newsmaker this week, and is it SpaceX listing or the FIFA World Cup starting off, and you got to choose between the two. Difficult choice to make.
Very early in the morning or the middle of the night for both.
Both are happening in the same continent, so it's fine.
The same day. No, but just very quickly, the bull case for SpaceX is that Starlink funds spaceship, that collapses the orbital axis or which Elon Musk wants to do. And if that access comes off, and therefore you have a new wave of broadband internet technology which is on the cloud and beyond what the traditional avatars are, with virtually no competition because nobody's in this space, then you're looking at a clear winner. Now, can he deliver is the $1 trillion question.
Professor Shah in the house, also talking about space, quantum physics.
But virtually no competition, Tamanna.
I think
if
so.
he manages.
I think so, and the fact
the pricing is going to be key.
The fact that Elon got Jamie Dimon on to sort of kick off the roadshow for SpaceX was power flexing. I thought it was also cool that his mum was there, May Musk, to talk about it. So, I mean, there is something here which I suppose people who understand this better have put together. But yeah, exciting times. We'll take a very short break. We're coming back to strategies for you here and now on the other side of the break. Just pull up the implied before we get into that break. 260 points down. Remember, it's come off from the worst point since we started this show this morning. Will you see a gap down? Yes. Could it improve? Perhaps. What should you do then? We're coming back with that after this break.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal, and we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year.
Okay.
We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So
Okay, welcome back. You're watching India Market Open. It's going to be a gap down this morning. Can it improve? That's the question. Kuch Bora and Parag Thakkar in the studios with us. Kuch, I'm actually going to come to you first. 23,100. If we get to those levels, do you see the possibility of a turnaround from there? Is it a duck and cover morning?
First up, a very good morning.
Good morning.
2, welcome back, Alex.
Thank you,
So
sir.
good to have you here.
It's still raspy in the throat, but getting there.
I'm getting it.
He's getting there. And 3, with so much optimism on the table, market कैसे rebound नहीं करेगा? Before you went into the break, you said the same thing कि हाँ ऐसे optimism है, rebound कर सकता है. The question that you're asking me is that I think that sense is already there in the market and it's already there in the data as well. So let me just share what's the view on the Nifty. And yes, there is a very good possibility that if we open, there was a 300-point downtick, right? We're already at 250. So there's already that uptick that we're starting to see. So there is a good possibility that if we do get this 300, 250 odd kind of a dip, we could see a rebound. Not saying we'll end in green. Let's hope that we do, but unlikely. But yes, we could still be better off from where we open. So data points. lower weekly close for Nifty, lower high, lower low formations on the weekly setup. So yes, you could have a negative opening. I think that's safe to say on the basis of global cues. But FIIs are already heavily short at 92%. On Friday, the additions were minuscule, which means even they want to cover those short positions at some point in time, right? So if you're getting this kind of a cap down, this is a good opportunity to go out and cover those short positions. PCR already at 0.83. Mind you, the support zones for Nifty, 23,150 is the immediate one, but right after that, you've got a good put congestion at the 23,000 mark. So if you come close to those levels, like I said, for a rebound, this is a good trade. And mind you, we've been talking about just a rebound trade on the Nifty, not a positional long trade. This is a continuation of that. Where do you go positionally long on? Bank Nifty. The outperformance continues on Bank Nifty, right? 3 weeks of positive close, 4 consecutive sessions of positive close. You've got this momentum going for Bank Nifty. 52,800, 53,000, that's a good support zone, recent swing low as well. So if you do get any, or if the Bank Nifty actually slides to those levels, risk reward ratio becomes very favorable with a stop loss of 50 to 200. I have my doubts that we'll actually come close to those levels on Bank Nifty. If you do, you have to go long positionally. So like I said, for now, the view continues. Nifty you play only for rebounds. Bank Nifty is the index that you consider for positional long trades.
Okay, what about individual stocks?
No stocks today.
What?
देखो कायदे से तो बनता नहीं है मैं कुछ भी दूंगा 350 पॉइंट नीचे खुलेगा 300 पॉइंट नीचे खुलेगा तो सारे लेवल्स हिल जाएंगे
वीकली स्टॉक्स भी नहीं दोगे आप
वीकली तो खास करके नहीं दूंगा एलेक्स बिकॉज़ व्हाट्स हैपेंड इज आई रियलाइज दैट देयर इज सो मच ट्रैक्शन ऑन इट अभी दे दूंगा सारे लेवल हिल जाएंगे तो गड़बड़ हो जाएगा
fair enough
okay, that's fine.
but I will still share stocks with the caveat that don't look at these as trades right at the open. See where they are opening, stop loss है target के पास और फिर decide करना. So I'm still going to give you stocks, but don't take these as immediate trades at open. See where they're opening, see where the market settles for the first 15-20 minutes, and then consider if they're very close to stop losses, don't execute. So starting with the one that is the most anticipated on Monday mornings, the weekly pick has to be from the hospital space, right? We've discussed so much about that that space last week with all the PE interest and everything going. Price action also starting to show. Kim's is the one that makes the cut, by the way. A lot of other names are also doing well, but Kim's is the one that I've selected. Basis the kind of resistance levels it's taken out, volumes that it's seen in the last week or 10 days. So for targets of 825, 860 with a stop loss at the 755 mark. Equitas Small Finance Bank. Now, a lot of these players are starting to show traction. The resistance for this one is actually precisely at 73.95, but with the kind of volume traction, it's a slightly preemptive trade, correct? I mean, you can call it slightly preemptive trade because it's at the resistance mark. So for targets of 76 and 78.5 and a stop loss at the 71 mark, Equitas Small Finance Bank is the second long call. And the third one is a short idea on IEX. We know the trend has been negative. We've seen selling pressure at higher levels. 121, 119 immediate targets. 125 is where you keep that stop loss.
Okay. Well, start off maybe slightly lower. So therefore, we'll analyze the risk reward once again with Kush once 908 or 915 goes by. Well, interestingly, Equitas Small Finance Bank, something that Parag Thakkar I know concurs with as well. Parag bhai, start off lower today. You'd like to buy on down days. Yeah. Is today the day that you deploy, and if so?
Yeah, it is darkest before the dawn. So I think all things which can go negative have gone negative on Friday evening, right? Iran, Israel, oil 96, all semiconductor chips stocks down, Kospi, Nikkei, Taiwan, whatever everything is down, right? It is recovering right now as we speak, but I would say that there was a new research thing which came up which was very interesting, that NVIDIA has developed a new AI thing where the requirement of memory will be half of what it was anticipated. That's why Samsung and Hynix and all stocks are down. So I would say that when everything turns negative, at least you should buy something on that day. So that something is, say for example, ICICI Bank is always there, Kotak Bank is there. Axis might be. I think this private sector banks
banking,
are making. Yes.
Focusing on banking today.
Yes. So definitely on a big decline. Even Indian IT will make sense because if AI trade is going to falter, of course, this is just one day into it. We are just one day into it. So, but I would say that if valuations have cracked significantly, and if some of these AI plays go away, of course, part of the fall I might attribute to the SpaceX IPO also, because people have to sell something to buy, and SpaceX is in tech sector, so you might as well book profits in
But they're talking about it as a tech AI play as well.
That's why. So you need to sell some other AI
in the same sector.
Okay. So that also might have triggered this fall. Let's see how it goes. But I would say that ICICI Kotak for sure.
But you've added Kotak seemingly into the list.
Yeah. I like Kotak. Kotak.
Why is that?
I'll tell you. See, they went through. It's one of the most prudent and conservative management that we all know, right? They grew at 16% last year. They have said that 1.5 to 2 times nominal GDP they'll grow. This time nominal GDP is also inching up higher because of inflation, right? So I would say that they will grow at 16 to 20% with stable, I would say range-bound margins like ICICI Bank, because everybody's margins are under pressure. Let us admit that, but that is factored in the valuations. That is what I'm trying to say. Kotak's valuation, if you see FY28, their book value is 170 rupees. And subsidiary value is 150 per share. So out of 390, if you reduce 150, it is 240. And 170 is a book value. 1.5 times book value for Kotak, I have not seen in my life. For a 2% ROA bank, which is prudent. And they had problems with microfinance, retail CV. All those problems are getting flushed out. And now asset quality from here on should stabilize or improve. And OPEX to asset should also start improving.
But Parag bhai, all of those things are fine. The only caveat here is that the selling that you've seen in Indian stocks by foreign institutions obviously are in the large liquid players, which are the large private sector banks.
Absolutely.
And so therefore that overhang is likely to continue to remain.
So let it continue. Na? कितना गिराएंगे? कितना गिराएंगे? गिरा दो, ठीक है, और 10% गिरा दो, उससे क्या है? So we have to stagger our buying, right? I'm not saying you put all your money into today's fall only. Yeah. I'm saying at 1.5 times price to FY28 Kotak, margin of safety is too high to ignore.
Okay, so top 5 buys today from Parag Bhai. It's fundamentally, it's not on charts.
Yeah, and it cannot be a momentum trade.
And it's not a momentum trade, so it's fine. Coach, I can understand that you want to stay away, and it was a wise decision because when there's so much volatility, but fundamentally, you've already talked about Kotak Mahindra Bank.
ICICI Bank is always the one.
Evergreen.
So ICICI, Kotak, HDFC, Axis, that private sector banks, of course SBI also now with bond yields cooling off a bit. Yesterday, due to RBI's action, bond yields were at 6.95. SBI also makes a cut over there, SBI, BOB kind of names. So those are banking sec. IT, of course, Coforge, TCS kind of names.
Coforge, TCS.
Yeah, Coforge, TCS kind of names. Accenture, Cognizant, unfortunately, we cannot buy here. So that is IT. Bajaj Auto in two-wheeler names. JSW Steel, if it fell on Friday, if it falls further 2-3%, it makes a good cut. Grasim is there.
So you're focusing large caps, Parag Bhai.
Yeah, but see, basically when markets fall, I tend to focus on large caps because that even on the rebound, they'll be the first to rebound. Of course, right now, as Alex has rightly pointed, right now FI selling is going on. So you cannot expect a rebound very soon, but let's hope.
Okay.
Valuations are very attractive in some large cap pockets.
I like the dialogue. गिर के भी कितना गिरेगा?
बेच के भी इतना तो बेचा है.
Okay, so is it time to turn the tide, or will the tide turn? A bunch of counters also in focus on the back of order wins today. We're giving you all the news, all the views, everything in this Power Pack session. Varsha joining in with a list of companies that have reported order wins over the weekend. Varsha.
Well, I'll be talking about 4 stocks on the back of order wins. You have KNR Constructions, wherein one of their JVs have received LOA of rupees 3,361 crore from Southeastern Coalfields. This is a coal mining contract at Kusumunda project, and KNR holds 51% stake in JV. Well, you also have Railtel Corporation, wherein they've received a small order of around 41 crore from Uttar Pradesh police recruitment. This is to provide security related ancillary services. You also have EMS, which has received 103 crore construction order from UP Jal Nigam, which needs to be executed in the next 24 months. And lastly, you have Creative New Tech, where it's a very small company though, but they've received a huge order of 3,195 crore advance work from BSNL. The order is for BharatNet network project in Odisha. So small company, but a huge order coming from BSNL. So keep a watch on this counter as well. So these are 4 stocks which will be in focus on the back of order wins.
Got it. Okay, so individual stocks. Kush, if you manage to get any one of those names, right? And there were quite a few of them, KNR Constructions, Railtel, and some of these rail stocks as well. Let's throw in Titagar, let's throw in Jupiter Wagons, and Neeraj pointed this out just a while back, the potential for order wins coming through. So fundamental basis is there. What about the technicals?
Yeah, actually, I was quite happy to listen to why the rail stocks were doing well. You mentioned that, right? Because in my in my study, also a lot of these names popped up, particularly Titagar, because technically it's starting to make the right moves. And really, I was missing perhaps a fundamental trigger on this. Glad to know that there is some it's not confirmed yet, like he said, but there is a good possibility that these can receive orders. So, basis that, I think Titagar is something that I will focus on. The stocks actually cleared the 200-day moving average a while ago, comfortably sustaining above that. Golden crossover on the cards, volumes also fairly healthy. So, and plus, there has been a rank underperformance. So, if there is any positive trigger, there will be a good up move on these, that could come about. So, with the stop loss at around the 800 to 805 zone, I think Titagar is something that I can consider positionally for higher levels of about 870 and 920. So Titagar is something that I would still be a little constructive on. Good risk reward ratio.
Among some of the EMS players, let's look at them as well. A whole host of opportunities coming up, even from the context of the report today that the West Bengal government is looking at huge investments in the space, is going to invite bids, etc. We had a very interesting story on Amber. Do you think that that's a space that starts looking now worth checking out at least?
So I think it's I think perhaps prudent to give a pecking order in this, because I don't think the entire sector is just going to turn a corner around, right? So I don't think Keynes Dixon still have so much going for them.
Sirma Amber?
Yeah, so as far as the order goes, Sirma number one, but it's already run up quite a bit, so probably on declines is when you consider. So that's number one. Second is PG Electroplast. It's actually seeing some knocks, but the rebound on this one has been steady, gradual, volume back. So that's the second one. And third one is Amber, where the stock's very volatile, but if you look at the start of this calendar year, it has a very clear rising trend line support. So with stop losses around the 70-200, 70-300 mark, Amber is something that you can consider, but mind you, very volatile. So Sirma, PG Electroplast and Amber.
Okay, so that's a host of stocks that you should watch out for in trade today. Another group of stocks on the back of a brokerage note, and this is Jefferies. There is a bullish commentary on a few Adani Group companies. They flagged strong capacity expansion and improving growth visibility, as well as attractive valuations from their perspective. Let's take a look at what they're saying on three of these companies. Sharad joining in to tell us what they're saying. Sharad?
Good morning, Alex. First one is Jefferies on Adani Green, and over here they have maintained a buy rating and the target price is 1435 rupees per share. And the bullishness comes in is on the capacity expansion. Now, of course, they are ramping up the battery energy storage system also. And to put that in perspective, the number is 10 gigawatt in FY27, which is expected to go up from the current numbers of the 3 gigawatt. Also, the valuations are at a 56% discount to the January levels, and the peak 1 year forward EV/EBITDA still has an upside for execution. You're looking at Adani Power maintained buy rating, target price is 255 rupees per share, and also the focus is to increase the almost 56% of the upcoming 23.7 gigawatt capacity, which is already locked in long-term PPAs, to make it up to 100%. And also they're expecting a 23% EBITDA CAGR over the next 4 years to turn free cash flow positive. That is where there is a bullishness coming in from the broking house. And lastly, Jefferies on Adani Energy Solutions have given a maintained buy rating, target price of 1665 rupees per share, and they have stated that the near-term bidding pipeline is roughly 1.5 lakh crore rupees compared to almost 54,000 crore rupees by end of FY25, and also the company is executing strong transmission orders. So this is the bullishness coming in from Jefferies on 3 Adani Group of stocks.
Yeah, and of course, standard disclaimers there. You're watching this report on NDTV Profit. That's a subsidiary of AMG Media Networks Limited, an Adani Group company. As an investment opportunity on what you've seen in Adani Group stocks, do you think that the run-up has already taken place, or is there more to go? Looking at now that headwinds are out of the way, which were there in place for the last few years, a lot of plans are now coming to the fore.
Yeah, absolutely. So basically, stocks have run up. That is the only factor which stops me. Otherwise, we were discussing Adani Enterprise 1850, Adani Ports at 1450. So the group is doing phenomenally well. If you meet them, you get a feel that we are in a country which is having 12% GDP growth. So they are so optimistic, bullish, and their execution is phenomenal. So I would say that. So everything is going on great for them. It is only that stock prices have rallied a lot. But that is, we have seen institutional investor coming back in a very big way. So
it was interesting to see SBI Mutual Fund lap up the entire
GQG.
selling of GQG in Adani Enterprises and Adani Energy Solutions. So yeah, good going. Kush, you like trending stocks higher, right? I mean, what within this group looks good for a trade even now?
I think Adani Power still looks good. And I think I'm submitting to the idea that abhi to niche mein nahi milenge, ye to thoda upar mein hi lena padega. Adani Power is something that's corrected a bit and it's close to support levels of about 225, so that is something that you can consider. The other one that was discussed, I think Adani Green. Here too the prices are elevated in terms of where they are in terms of the recent swing highs, but the RSI is not. So there is still momentum on the upside. So with a stop loss at about 1450, you can consider this for 1600 plus 1695 kind of levels. So Adani Green, Adani Power, just because the RSI is at a very benign level, but trending upwards, you can still consider both of these names.
Okay. One pack that is not trending is the FMCG pack, and it's been 4 weeks on the trot of declines for the index as a whole, but Nestle India could be something that you should watch out for. It is sharpening apparently its growth playbook. It's betting big on rural markets and driving penetration-led volume growth and doubling down on brands as well as capacity and technology. Let's bring in Mahima to tell you about what they're seeing in their annual report. Mahima?
Right, so Alex, in the annual report, Manish Tiwari has mentioned the next phase of growth. What will that look like? And he said that rural India remains one of the most significant growth opportunities going forward. They're going to take fewer, bigger, and bolder bets, and this is on similar lines with what HUL has also gone ahead and said. And this is from a brand strategy point of view. India is a strategic growth engine for Purina. Now, this is an interesting one because this is their pet food business, and they've said that they're firmly doubling down with a stronger portfolio as well as scaling access with sharper route to market for their pet food business. So this is also something that they'll be focusing on from here on. In terms of out-of-home consumption, they're saying that that remains strong among India's Nestle fast growth business, and overall penetration-led volume growth rather than a price-led growth is something that they'll be focusing on from here on. In terms of top priorities, consumer centricity becomes the first one. The second one is penetration-led volume growth. The third one is reinvestment behind brands and capacity. We saw that Q4 saw almost a 50% spike in the ad spends, and accelerating tech-enabled sales and operations is something that will be their fourth priority. So this is the overall view and key takeaways from the commentary coming in the annual report from Manish Tiwari.
Yeah, Nestle already 2.5% up. You're seeing the first tick of the pre-open session. All of this will settle. The Nifty showing me a 1% down tick in the pre-open session, just in line with what your implied was indicating. But remember, there's some ways to go over there. Sirma SGS, after its annual investor report, seems to be about 12% down. We'll get you a quick take on what they've been saying. Blue Jet is down, Capri is down, IndusInd. We're just looking at some of those. IndusInd actually had its auditor's report come out, and it showed that the hit from that Chandigarh fraud was no, that's not Indus, IDFC Bank, sorry. Anant Raj is seeing a bit of a problem there in terms of the first tick. Exaware Tech, Coforge also down, but then so is everything else. You have a very skewed advanced decline ratio this morning, as you would expect. Premier Energy is about 10% up. Alembic looking interesting. Sun Pharma, Balrampur Chini, Concord Biotech. So you might see some of the pharma players who are looking good. I want to talk about FMCG since we spoke about Nestle. Investec has an interesting note out. They're saying FMCG pricing continued upwards with hikes in snacks, breads, oils, soaps and oral care. QSRs focused on value resets, combo recalibration and menu cleanup. Raw material trends were mixed with oils, tea, crude, polymers and gold remaining inflationary pockets. Consumer stocks corrected broadly on a 1M basis, though select names outperformed. Top picks remain Eternal, Marico, Varun Beverages and Titan in large caps, United Spirits and Radico in mid caps, Mrs. Bector Foods and IGI in small cap space. We should look at how some of those stocks are doing. And I want to get Parag Thakkar's view also on FMCG and on Nestle specifically.
No, I think, see, one of the reasons why FMCG is falling is one, higher crude oil price, which will increase their packing costs. And second is prediction of a not so great monsoon, below normal monsoon. But I would say that again here also this is a space where actually it is getting oversold in my view, and I would agree with this report in the sense Marico and Tata Consumer are my top picks also. So I would say that within the names you mentioned, so I would say that FMCG is anyway recession proof business. So there might be some down trading if the consumers are burdened with very high inflationary things. But people will cut down on discretionary consumption, not the staples. So I would say that in staples, the maximum risk you have is down trading. But that is okay. And in this kind of scenario where your raw material prices are shooting through the roof, actually the organized and the listed ones gain market share. So I would say that Marico and Tata Consumer are the names which I would also go with. Okay, of course, Nestle also annual report is also commentary is also very positive, and the results were fantastic on March results.
Yeah. Okay. So certainly a pack to watch out for. Nestle now down about 1% or so. Milan Vaishnav, he's founder and technical analyst at Gemstone Equity Research, joining us right now. Milan, good morning to you. Would you venture to have an index call at this moment, or would you wait for the dust to settle in the first 15 minutes odd? Do you anticipate that short covering could come through in the remainder of the session?
Hi, very good morning. See, I'll obviously wait for the dust to settle. The thing is that I have been maintaining over the past a couple of weeks that markets are basically staying devoid of any directional bias. We are not expected to see any upside momentum so long as we are below 23,800. 24,000 levels. In the same breath, we aren't going to see any downward direction also, so long as 23,000 stays defended. So markets would open today near 23,100, which is an important support zone that will have the gap entirely filled, which was created on April 8, gap up opening in the markets. I expect some sort of stability to come in. I don't expect any directional bias even on the downside to persist much, but this is certainly a no trade zone for the Nifty. We have to wait until the upper edges or the lower edges are taken out or violated, as the case may be, before taking any directional call on the markets. I would stay away from taking any directional call on Nifty as of now.
Okay, so avoid a directional call on the Nifty. It says, look, they're about right. 23,100 are the levels you might open at. But let's talk about India's auto retail sector that has delivered a strong performance in May. The numbers from the Dealers Association are out this morning. They've clocked a record 25.3 lakh unit sales, up over 9.5% year on year, despite heat waves, fuel price pressures and global uncertainties. To talk about this in detail, the May auto sales data, CS Vigneshwar, president of FADA, joins us now. Mr. Vigneshwar, thank you so much for your time to us. So May has been better than most expectations.
It's kind of been the best May for three-wheelers, passenger vehicles, tractors, and also as an overall, it's been doing really well. As you rightly mentioned, yes, we have headwinds in terms of delayed monsoons, the heat wave, the West Asia crisis. There's a spike in the fuel costs also, but it doesn't seem to be stopping the markets. The passenger vehicles grew at about 23% year on year. Two-wheelers at 7.5% growth, CVs again at 5% growth, tractors at 11%, and overall we're at about 9.55%. I hope this continues, and I hope the good news continues for some time.
So, Mr. Vigneshwar, the concern that certain pockets in the street are having at this moment is that flat-rolled steel prices have gone up, raw material prices have gone up quite substantially. So, what are the pricing trends that you're seeing at the dealership level? Are you seeing that price increases have taken place, the ability to pass on is there?
There's been minimal price increases throughout all the brands and throughout the verticals of commercial vehicles and tractors and two-wheelers and passenger vehicles, of course. But it's not been alarming. A lot of it has been absorbed by the manufacturers, but of course, this may not be permanent, right? I mean, the crisis, hopefully it comes to an end and all the prices again come down, the commodity prices come down to natural levels. So we hope this is not a long run thing. And in the short run, the manufacturers have been able to absorb most of the prices, and some of that has been passed on to the customers, yes.
Is there any instance of discounting that is taking place in the passenger vehicle space right now?
I think the passenger vehicles space has been heavily discounted for the last couple of years.
Yeah.
The trend is continuing, but certain models have become available. The availability is in question, so therefore there the discounts have come down. But overall discounts remain high, and it's a great time to go and purchase a vehicle at this point.
Yeah, I would assume anyone in that industry will say exactly this. But just wondering, Mr. Vigneshwar, are you seeing any increase in interest in electric vehicles as crude prices go up? And this is in the here and now. I know there's just few days of June, but are you seeing that change coming in?
We saw that in May itself. The EV penetration overall as an industry went to about 11%. In the passenger car segment, it was about 6.6, the highest ever. In the two-wheeler segment, it went past 9.5%. So I think the EV situation is good. The growth story is good. The trajectory is good. Perhaps the West Asia crisis has actually turbo boosted the whole sequence of events. But we are yet to see whether this is set to continue in case the fuel prices drop, which normally doesn't from historical the last 10 years. So we probably need to see whether this is there to stay or not.
I just want to confirm, what is the extent of discounting that is currently taking place in the SUV space, for example, or in the passenger car market, if you compare it with the start of the year?
It's very similar. It hasn't gone up, but it hasn't come down. Yes.
Okay. All right. Clearly interesting trends to watch out for, Mr. Vigneshwar. Thank you so much for taking the time. Pleasure speaking with you.
Thanks.
All right, it's on to our big brokerage call of the day, and it is Systematics that has turned bullish on the textile sector and initiated a buy on Arvind as well as Nitin Spinners and Sanathan Textiles. We've got Sharad joining in to tell you about the details. Sharad?
Well, yes, Alex, we had already pointed this trend out earlier at NDTV Profit, especially on the increasing cotton yarn spreads, and that's why the benefit is coming in. And now the broking community is also taking notice of that. Systematics has given an initiate buy rating for 3 companies, Arvind, Nitin Spinners and Sanathan Textile. What's important is that the upside potential of all these stocks are more than 35 to 45%. So that is something to look out for. An important takeaway coming in is that they believe that India is at an inflection point when it comes to regaining its lost market share when it comes to the exports. The ecosystem via the PLI scheme is something which the street is quite bullish on. The free trade agreements with major economies is also giving a good impetus for the exports going ahead. But still there is a 7 to 8% US tariff gap versus China, and the favorable regulatory taxes also augur well for the textile industry. And that is why Systematics is quite bullish on these 3 counters.
Okay. All right. Textiles in focus. As far as Investec is concerned, but actually there is a lot which has come out in terms of interesting notes, and I thought this Blue Star note from Citi was interesting. Let's pull up Blue Star, where they're saying room air conditioner channel inventory is no longer a concern, with inventory correction largely complete and tertiary demand strong. Primary demand is healthy and channel stocking could resume in the second and third quarter if sell-through sustains. Margins are likely to remain under pressure as price increase of 8 to 10% have not fully offset commodity and currency-led costs. Non-RAC cooling solutions could grow. So keep an eye out on some of the AC and cooling solution businesses as well. Keep an eye out on Minda Corp. Haitong has a note out today where they've initiated an outperform on a Minda Corp with an 841 rupee target price. They're saying they're accelerating growth through premiumization and electrification, diversified sticky OEM franchise and order book visibility, and they're well positioned to deliver sustained growth ahead of the broader auto industry over the next 4 to 5 years. Milan, do you have a set of picks this morning?
Yeah, I do have set of picks, but they are conditional in nature. They are supposed to be entered into only above the mentioned levels. I'm making this a caveat because we are likely to open lower. So the first pick would be Pidilite Industries. One can buy above 1475, expect 1540 on it, and put a protective stop at 1450. Second one would be Titan, buying above 4260 with a target of 4400 and a protective stop at 4200.
Yeah, well, certainly watch out for some of these as well. You know, 3 order win candidates and very quickly Kushbora out there. One of them is HG Infra, which had a very strong order win. So if not that, then there were 2 other names which got large order wins. KNR Construction, a 3,360 crore order, and Creative New Tech, a new name, but got a 3,200 crore order. Out of these 3, any on the charts?
To be honest, Creative is not something that I have tracked, but just the kind of setup, it's given a good breakout. So right now, I would suggest avoid because it's already a big gap up. And in a market like this, you don't want to be chasing big gap ups, right? HG Infra, for now, avoid. The structures, the stock's actually trending a little lower. KNR Construction is interesting. That's the one that you can focus on. Rising trend line support. It's just resisting because the market's not going anywhere really. But I think a break above 135 will push the stock to a different trajectory than 141, even 149 kind of levels. Very much on the cards. Positionally, I like KNR on the downside. Stop loss on this one, 125.
Milan, I want to ask you a difficult one because it's rallied quite a bit and most people have disbelief on the rally. That is Z Entertainment. At 113, if you were long, would you stay long? Conversely, if you didn't have a long position, would you buy it for the next 2-3 days?
No, I would not buy it for the next 2-3 days. If I were been long, I would look this strong rebound that we have seen to exit the stock.
So they've gotten 2 World Cups for $60 million. The initial price tag was set at about $100 million. Perhaps that's why there's some interest in the stock. But metals as a pack down, at this juncture, I'm seeing no gainers in the Nifty 50. In that context, anything that looks interesting in the, after the pre-open?
Yeah, and I'm going to stick with the stocks that we discussed, Kims, Equitas, Small Finance. But yeah, like I said, I mean, let the market settle for the initial 15-20 minutes, and that's when you consider any kind of long trades or short.
What about you, Milan? Would you venture out and pick anything that you haven't spoken about yet? In the pre-open session, you have a few big movers on the downside at least.
Yeah, that's fine. I would wait for the dust to settle, as I just mentioned where we started out. But I would keep an eye on Siemens and AB Capital.
Siemens and AB Capital. Well, a lot of names, and in Z's case, also the promoters wanting or doing a fundraise meet. The folklore is, or the belief is that the promoters are also going to put in capital in that fundraise meet on June 10th. So keep an eye out for that one. But the rates will be. We'll have a gash of red for sure on open. The question only is how deep is it and do we bounce back a little bit from those levels. For now, 1% lower, 266 points in the red. So it's all red, frankly. The market there doesn't look good. Banks are down about 1%. I'm sure IT too must be having a bit of stress point, 1.5% lower. Nothing can be spared considering the kind of fall that the world markets have seen. So this is not India getting punished for India reasons. This is Indian markets getting punished for world reasons. Keep that in mind. Market breadth is weak. Let's pull up the heat map. A lot of red, hardly any green, I would suspect. If at all, nothing in the green. Everything in the red. Okay, now a bit of a Tech Mahindra, maybe ONGC marginally because of that oil price uptick. Nestle, slightly constructive letter, etc., etc. But a very defensive bent, if you will, to the markets, right? Because you're seeing pharma out there, Cipla, Dr. Reddy's, Sun Pharma, etc. in the green. So a very defensive bent, and no surprise, it should be that way. What is correcting? Wipro down another 3%, by the way. Weakness in Hindalco. There is an HSBC node which is actually positive here, but everything is cracked, and therefore no surprise that Hindalco is down. Indigo is down 2%, Tata Motors, PV, TCS. Well, IT is having a tough day, you can see, except for Tech Mahindra. And then there's a Shriram Finance out there. Eternal down 2% too, despite the news of a Zepto IPO, because one would suspect that might bring Eternal in the equation on the long side, but for now the market is not quite liking it. So Tamanna, not much to say except for the fact, at least on the large caps, that there is just a deep gash of red. Let's see, the markets though about 1%, not dramatically lower.
Yeah. I was just thinking about the line you said, Neeraj, that India is now, not for India reasons, but for global reasons. That seems to be the trend, right? It's never India's fault, but we keep getting hit. Today is again one of those days. I want to pull up the India VIX before we do anything else. Just pull up the chart of the India VIX, up about 13%. So you are looking at volatility. Clearly, there is some fear. That's the fear gauge. There is fear on the street right now. That's 14% up. This needs to come down rapidly for any kind of turn, even though you have Nifty at some very crucial levels, holding up about 23,100 right now. The advanced decline ratio is not a pretty sight, admittedly. It's quite bad. 250 points down on the Nifty right now. I'm going to pull up the broader markets and see if the gash is as bad there. Nifty mid-cap about 1% down. Actually, it's not a horror show, let's be honest. After everything that you've seen around the world, you saw the Kospi had to halt trading and then resume again after a gap. All of these Asian indices were down 7 to 8% in some cases. So you're less than 1% down or about 1% down on most key indices. Nifty down about 1% right now. So I wouldn't press the panic button. Let's pull up the sectoral heat map if we can and just look at if there are any greens there. You're seeing a completely defensive play. The Nifty Pharma about 0.34%. There's actually a note on healthcare stocks where, nothing really is bothering pharma companies in the middle of everything that's happening in the world. You're seeing innovation coming in, even on the trade deal and whatever the USTR is trying to do, the pharma companies are relatively unscathed. Nifty Realty, Nifty Auto, all of your consumption plays, high commodity cost plays, high raw material plays are all bearing the brunt. But even the Nifty Realty just about 2% down. So it's not the worst thing in the world. I'm going to go through individual stocks very quickly. I'm not sure how much they will react to the news, good or bad, because the mood is off, generally speaking. There are a lot of projects that could come in from West Bengal. Possibly you are seeing a spot of green on a day like today. A 2% up on a Tex Maco is actually quite a big deal, I would say. Hindustan Zinc has an MOU for a 250 hectare restoration project. Nothing much happening there. NIBE has received license for manufacturing and proof testing of firearms. KNR Constructions has a LOA for 3,361 crores. That's 1% up. And Amber Enterprises, the only other one that I will take, they have a joint venture to go into defense. That's about 1.5% down. I think we're going to have to look at, let's pull up Ixigo as well, because we talked about that deal that they did. They're buying a stake in a company called Breviste, just about 1% up. You're not going to see some big pops on the positive side. I don't know if you're spotting any clear winners today, Alex.
No, Tamanna, in fact, if anything, while at the benchmark level, and I'm including the broader market benchmarks as well, the cuts are not very sharp, the breadth is not very good. So you only have about two gainers for every 8 or 9 declines, and that's visible on the screen. There you go. At the bottom of the screen, you see the advanced decline ratio. It's not looking very pretty. But from the broader markets, in fact, the drops are more significant. So something like an HFCL losing about 5% in trade today. GETND also about 4% or so. Orient Refractories losing close to 4%. Netweb Technologies and the entire metal pack. So pull up the components of the metal index. It was the worst performer on Friday, and you have the underlying that is underperforming as well. I'm talking about the commodities, but you have Steel Authority of India Limited that's losing about 3%. You have NMDC of Lloyds Metal, Hind Copper, Hindalco from the Nifty 50 pack, one of the biggest losers on the benchmark, down 2%. Nalco also 2%. So therefore, let me ask Parag Bhai. He was mentioning that you could look at certain opportunities in the metal pack basis this kind of a decline. Would you name some of them right now?
So basically, no, I have said that JSW Steel is the only stock which which is under my radar to buy on dips. See, I'll tell you the reason why metal stocks are not doing well today is, yesterday job data in US was very strong, 172,000 versus expectation of 80,000. And so dollar index also rallied. Yeah. So when dollar index goes up, when US 10-year goes up, definitely metal has to go down. And that's why we saw on LME, aluminum also was down by 1.8%. So I was expecting this move that metals will drop today. But in this fall, I would definitely look at JSW Steel as a structural story because it has got very less to do with LME and very less to do with 10-year bond yields and all. It's on its own path. It is expanding at lowest capex per ton, lowest opex per ton, and so a structural story from long-term perspective.
On the technicals, though, metals still look terribly weak, don't they?
Surprisingly not.
No?
The metal index itself had negative divergences for about 2, maybe 3 peaks. So, which means, every time the metal index went on and hit, new levels on the higher side, the RSI did not. So, that was already building up somewhere. And we know historically metals has been a pack which is volatile. For me, if you ask me, and I'll include some of the other names also in this, by the way, this is the excessive cooling off in metals. So, Hindalco, SAIL, Nalco, ये सब में profit booking healthy है. Now, let me include some of the other names that you mentioned. Sirma SGS, GVTND, what a run up in these, right? And we said these are all buy on declines candidates. So, these are the kind of declines that you buy on, when you get, situations like these. So, for me, this is still very much, an uptrend. Metals, of course, more volatile than some of the other names that we've discussed, but still fairly healthy. Just a quick word, KIMS and Equitas still going strong in a market like this. KIMS is hovering in that green red zone, but largely in the positive. Like I said, if this is where it's going to stay for the next 5-10 minutes, it's a good idea to accumulate for the levels that we had discussed, because these are not showing as big cracks as some of the other names are in the market.
Sugar, by the way, is actually doing well for itself. So Triveni Engineering, Balrampur Chini and the likes are on a weekday doing well. Got to do with this whole ethanol news and what could happen to further blending and therefore further demand for ethanol and therefore even more steady earnings. But they seem to be doing okay. Milan Vaishnav, anything in ethanol or anything in the sugar stroke ethanol play, you can call them whatever, but the Balrampurs, Trivenis of the world, do the charts look okay?
Yeah, see, all sugar stocks are not identically placed on the charts. They are structurally very different. So out of the crowd, I think Balrampur Chini looks more stable and looks much better on the charts as of now.
Okay. Balrampur Chini looks stable on the charts. Okay. Keep an eye out for that as well. What else on the markets wide? Moving higher aside of sugar, Ather Energy seems to be doing okay, so that's about 2.76%. There is Pfizer, a lot of pharma names out there actually doing well, and it's a strong bucket which continues to display strength. I saw on Friday Laurus Labs at 1450, exorbitantly valued but hitting new highs yet again. Pfizer today is the top gainer, up about 5%. Parag bhai, what within this cohort is still worth investing in afresh? If you did not have any positions, if you had to create something from the start, what would be a fresh buy within the pharma pack?
So I have
or the healthcare pack?
Yeah. So in pharma pack, of course, pharma is insulated from all these problems, as you rightly said. And so whenever there is a problem in the world, pharma is the sector to go to, right? So I would say that, of course, we have discussed Mankind in the past, then Ajanta Pharma, then Ipca Labs. These are the stocks which I would like to...
Not the hospital stocks at all?
So hospitals, as I said, Apollo I have missed. So
yeah. But are there any other opportunities there?
So Kush, you would like to come on hospitals?
Or pharma for that matter.
So hospital schemes is something that we've discussed as a weekly pick. So I remain constructive on the entire hospital space, by the way, and I will be selective. Of course, there'll be a pecking order, but right now KIMS makes the cut. But Ajanta Pharma is something that is common between Parag bhai and my picks. Ipca Labs also doing well. Senores is something that we've been discussing time and again. Mild consolidation, very thin volumes, but I think this is something on this profit booking you can look at. Keep a stop loss around the 995 mark. And look, I've been very constructive on Laurus for a while. अब तो मुझे भी overstressed लग रहा है. So I think if you have a trade, then it's a good idea to book some profits. A good re-entry point on this one would be 1350 and those levels. So Laurus Labs doing fabulously well, very stretched, but 1350 is the level that you want to re-enter at. Right now, it's a good idea to book profits or at least book partially and hold with trailing stop losses.
Okay. Bernstein has this note on healthcare today, which I thought was noteworthy. It says El Nino currents and US tariff news flow are heating up again. However, Section 232 investigation outcomes are a breeze for Indian biopharma and generics, and biosimilars explicitly excluded. Most favored nation and onshoring exemptions extend through January 2029, and patented medicine basket concentrated almost entirely to Sun Pharma. Their outperforms list within the pharma pack, since there's healthcare in focus today, is Zydus, Lupin and Sun Pharma. They already have a plant presence, strategic investment and a roadmap of US-centric supply chains that further insulate against any potential tariff headwinds. Orphan drugs and ultra-rare disease exemptions insulate Zydus, Aurobindo and the Lupin pipeline. So you have a bit of positivity there. In case you're wondering what are orphan drugs, there's a category of drugs that pharmaceutical companies create for ultra-rare diseases which have a very small market size and are usually subsidized by government. So these are not made for any profit or to scale up, and that's why they're called orphan drugs. So there's that category as well. So pharmaceuticals, at least in focus, something positive to take away as we wait and see what happens with markets. Kush Bora, Parag Thakkar, thank you so much for speaking with us. Milan, great to have you with us this morning as well. We're going to keep the focus on corporates. Bluestone Jewelry's Q4 demand held firm despite gold price volatility. The company now targets a 12,000 crore revenue by FY30 and expects a 30% CAGR growth going ahead. Before we get in, Gaurav Singh Kushwaha, the CEO of Bluestone Jewelry, Mahima joining in with some key highlights of this quarter.
Right, Tamana. So as you rightly mentioned, Q4 was operationally a very strong quarter coming in for Bluestone. Overall, it reported a same-store sales growth of around 34%. Studded share was as high as anywhere between 55 to 60%. Repeat revenue ratio was also as high as 56%. And number of customers saw growth of around 22%. And average order value also grew by 55%. Now going forward, they have penned down their outlook by FY30, where they target 12,000 crores of revenue by FY30, 30% same-store sales growth CAGR, and plan to grow from 340 stores to almost 705 stores by FY30. So it'll be interesting to know as to how the scale up happens from here on till FY30 from the CEO itself. But interesting growth rates coming in and growth targets coming in from the company.
Gaurav Singh Kushwaha joining in. He is CEO of Bluestone Jewelry and Lifestyle. Gaurav, very good morning to you and thank you so much for your time. Now, before we come to what Q4 looked like, because it's a bit in the rear view right now, just want to know what the current demand is seeming like. Are you seeing an on-ground impact of headwinds, West Asia crisis, in raw material prices? Give us a current update of what's happening with the company and the business.
Sure. So thank you for having me. So this quarter started on a very strong note. There was Akshaya Tritiya on 20th of April. And I think demand was very robust. After that, since the duty increase and PM Modi's appeal, there's some softening in the demand. But that's very minor. So we expect the quarter to kind of hold on and do pretty well in this quarter as well. And I think in general, what has happened is in that last couple of years, the people's belief in gold has only strengthened, and hence the categories see very strong numbers, very strong growth numbers.
Okay, very strong growth numbers. So therefore, Gaurav, good morning. This is Alex here. I see that you're targeting 12,000 crore revenue by FY30. That implies a 30% compounded annual growth rate over the course of the next intervening years. What are the levers that you're seeing, though?
So we have historically seen our stores generally becoming stronger and stronger as they mature in a particular catchment. And we are seeing that even the oldest of the stores which we opened 5 years, 6 years back, they also continue to deliver very strong same-store sales growth. In fact, that 30% is the same-store sales growth that we believe our stores can deliver over the next 4 years. And on top of that 30% same-store sales growth, we plan to grow our distribution by around 20% per year, taking it from the current 340 levels to around 705. See, a couple of years back, we started opening a lot of stores in tier 2, tier 3 cities also to check for the demand elasticity. And then we saw very strong numbers there. So across the different tiers, metros, tier 1, tier 2, tier 3, we believe there's significant headroom still to grow the number of stores.
Okay. So, Gaurav, good morning. Neeraj here. Are you saying that 30% odd CAGR that you're targeting will happen via opening newer stores in different catchment areas, or will it be a factor of same-store sales growth moving higher from the existing stores?
Right. So I'm saying overall that 50% has two components. One is same stores growing at a certain percentage. So I'm saying that same store sale growth is going to be around 30%, and 20% growth will come from distribution, and overall CAGR would be closer to 50% for next 4 years is what our estimate is.
Sorry. So let me correct myself.
So the CAGR would be around 50%, built on two components. One is same store sale growth of 30% and the distribution growth of 20%.
Sorry, so I'm just reconfirming. You are saying that the compounded annual growth rate for the next 4 years, revenue compounded annual growth rate, would be 50% for the next 4 years.
That is our estimate.
And does this translate in the similar growth rate to the EBITDA levels, or is the EBITDA growth number slightly different, CAGR?
Yeah, so EBITDA would grow even faster because there's a lot of operating leverage yet to be unlocked in the business. So we closed last year at close to 7.4% pre-Ind AS EBITDA. We estimate that to go up to between 14 to 15% over the course of next 4 years.
Okay, Gaurav, let's understand a bit about margins, right? Your Q4 margins are looking healthy, but there was also an inventory gain over there, which has helped about 50 to 50 odd crores, if I'm not mistaken. Without that, how are your margins going to be looking like through FY27 and Q1? Is the direction looking the same?
Yes, Tamanna, we are the only jewelry company that actually declares our margins after excluding inventory gains. So all the numbers that I'm telling you about are after excluding inventory gains. So the 7.4% margin that I just spoke about for the full year, as pre-Ind AS EBITDA, those do not include inventory gains. Though there were significant inventory gains, but this is outside of that.
What is the range that you're seeing sustaining for margins, Gaurav?
See, basically what we are seeing, our business is built very strongly. So we have our contribution of studded is significantly higher than what the general industry players see. And hence at a gross margin level itself, we start at a much bigger number of around 33-34%. Okay, and that when that gets translated to store level EBITDA, so I'll give you last year's figures. So last year we did close to 18.6%. Store level EBITDA after factoring in rent, manpower, and all the costs that go in stores. Now, below that, we have significant corporate costs also. So marketing and fixed cost at the corporate level is close to 11.2%. Now, marketing and corporate costs do not rise as rapidly, maybe 5%, 10% for corporate cost. And marketing, again, we intend to kind of triple our marketing budget over next 4 years, but in percentage terms, that still goes down. So essentially, we believe almost 2 to 3% of unlock will come at store level EBITDA as stores mature and start generating more revenues on a per store basis or a per square feet basis. We expand that 18.6% to expand, and we also expect this 11.2% to come down by around 4 to 5 percentage points as the business scales. It's just simple. Right now, it's at 2,500 crore, close to 2,500 crore. When that becomes 12,000 crore, the fixed costs, etc., become a much smaller percentage from the current 2.6%.
Got it. Gaurav, so speaking specifically about the studded business, right? And the trends that we're seeing in diamonds and the fact that natural diamond prices, something that a lot of people said would never happen, the prices are getting slashed, and for obvious reasons, because lab grown is finding more acceptability. So if you look at Bluestone and what you sell, what is the kind of split right now, and what are the implications of a higher share of lab grown in the future?
Yeah, so that's a very interesting question. What we are seeing is lab grown is impacting. Okay, so in India, so Indian jewelry industry or Indian diamond jewelry is also different from what we generally see in West. In India, most of the diamond that is used in jewelry is a smaller tukri diamond and not big solitaires. Unlike, let's say, Western markets where it's all solitaire market. So the impact of lab grown is more pronounced in solitaire side of the business. Now that business itself was less than 1% for us. And at an overall market level also, I think that business is not more than 2 to 3% of the overall jewelry market. So I think to that extent, what we are seeing right now is the impact of lab grown is confined to that. In the smaller, in the mainstay of studded jewelry in India, where diamond is not the product, diamond is just a part of the design, there we are not seeing any impact of lab grown either on cost or on demand.
Okay. Gaurav, I have a couple of questions really. One, I heard you say that your EBITDA growth will be quicker than the top line growth of 50% CAGR that you're envisaging. If I do a 60%, so could you do 60% EBITDA growth, CAGR?
See, I'll just tell you. So FY25, our EBITDA was 1%.
No, which
This
is
year
fine.
it was 7%.
I'm just asking, do you reckon you can do about 50% EBITDA growth? 60% EBITDA growth, CAGR?
I've not calculated the CAGR of that, but it will be. So we'll have to see.
I mean, I'm only asking because you said you'll do it better than 50%. So that's why I was thinking about it, right?
So 14% of 12,000 crore would be closer to 1,700 crore or so. 1,650. So basically, the number going from this year we did 180 crore. So it's 180 crore would go up.
No, you've done. Sorry. You've done an EBITDA of 384 crores in FY26 on a revenue of 2436, right?
Yeah. So those are reporting numbers, and like I said, we generally take inventory gains out of it.
Okay.
We adjust for few things, and hence that adjusted pre-Ind AS EBITDA, as it is called, that is 180. That is the sustained number to see, because that will be noisy.
So your 180. So in which case your EBITDA margin, not the reported one, but the other one, was about 7.38% on a top line of 2436 crores, right? And if you grow it at 60%, do you reckon at the end of 2030, when you do 12,000 crores of revenues, can your EBITDA margins, the adjusted EBITDA margins that you spoke about, can they be around 10%?
They'll be higher than that. They'll be around 14%.
In which case, just my final question, therefore, from a reported profit after tax of 13 crores of FY26 on an EBITDA of 180 crores at a 7.4% EBITDA margin, what does your profit number go up to in FY30 if your EBITDA is circa 10% or higher?
See, between EBITDA and PBT, there should be a difference. So it'll just be interest and depreciation, which should not be more than 2 to 3 percentage points.
Okay. So, the simple math, I'm just doing a rule of 3. You could actually touch about 90 crores of PAT in FY30 on a revenue number of 12,000 crores and an EBITDA number of 1,200 crores. Fair assessment?
900 crores, not 90 crores. PBT of 900 to 1,000.
PBT of 900 to 1,000 crores.
Yeah.
Okay. Gaurav, if I can come in on what the whole landscape is looking like for you as competition increases and you have big competitors out there. Is your customer acquisition cost something which is growing, or you will need to grow as you expand your chains and you try and get a piece of the pie?
Yeah, so our marketing spends generally grow year over year, but revenues are generally growing even at an even faster pace. Also, what happens is, as our business matures, repeat starts becoming a very, very meaningful number, right? So around 3-4 years back, repeat used to be just 30-35%. Now it has already gone to 56% last quarter. And that number is also increasing, right? So the money that you need to spend to get that repeat back is significantly lower than what you need to spend on a new user. And we are going to anyway, let's say over the course of the next 3 to 4 years, we are going to triple our marketing spend. So overall absolute marketing spends will definitely increase. I think on the competitive intensity, most of the players or most of the big players actually still continue to focus a lot more on traditional designs and traditional use cases. Whereas our focus since the time we started is more on everyday wear, more on let's say non-wedding side of the jewelry, which is almost 50-55% of the overall market, and it continues to grow more strongly than the wedding side. So I think our designs are the way in which we actually speak or to our customers or acquire them. A lot of our marketing spends or a lot of our marketing efforts actually are done online. And it also had something to do with the way we grew. For 6, 7, 8 years, we're only online, and we mastered the art of marketing online, getting people on the website, engaging them. And in our case, see, we are one of the very few truly omni-channel players or experience in this category, wherein almost everyone who buys from our stores spends a significant or makes significant number on the website, etc., looking at products, shortlisting products, and then walking into the store. So I think that's what
Gaurav, I just have one small clarification, please. You did 13 crores of reported profit before tax in 2026, right?
That's
13.
Right. That is right.
You are saying, so my math suggests that if you do 10% EBITDA margin in FY30, which you're talking about, core EBITDA margin, your EBITDA...
14%, not 10% though, but still, okay.
I mean, you were at 703, you said higher than 10%. If I take 10%, let's say, your EBITDA goes to 1200 crores. Your profit can't be 900 crores on the back of that, right? It will be 90 crores.
On 1200 crores?
Yeah.
It can't be 90 crores. 90 crores is 1%. Not even 1%.
On 180 crores of EBITDA in 2026, you done 13 crores of PBT.
You are scaling everything linear.
Yeah, I am. Unless you tell me otherwise.
Yeah, there is operating leverage sitting there. That's not the case. Interest costs.
So you're saying you will do 900 crores of
PBT. There is a few adjustments also. They are accounting stuff. So basically, we are a professionally managed company. We have a good source of people. So last year, there's almost 90 crores plus was just EBITDA cost, which are front loaded and which are non-recurring in nature.
Okay, fine.
Then there's 40 crore. Then there's 40 crore, which is rent adjustment because of India's accounting policies, which is not the actual rent paid. But the one that companies need to pay, and there's a delta of 40 crore there. So almost 130 crores delta is sitting.
Okay. Well, we wish you all the best for this, Gaurav. Strong growth aspirations, and we hope that all of that turns out to be true and more. All the best for that. Thank you so much for speaking to us today at NDTV Profit.
Thank you.
Well, yes, 50% CAGR. Not too many firms forecasting that. So
in this
interesting,
way.
Yeah.
All right, let's cut across to Tuhin Kanta Pandey, the SEBI chairman, who is speaking right now. Let's listen in.
To enable large issuers to list without immediate dilution pressures. We have also enabled companies undertaking reverse flipping to access markets more seamlessly, including allowing founders to retain ESOPs granted prior to IPO filings. Anchor investor norms have been broadened to allow participation from large FPIs operating multiple funds, helping deepen institutional participation. On the debt side, the corporate bond market architecture has been strengthened. The electronic book provider platform has been expanded to include issuances by REITs and InvITs, improving transparency and efficiency. In pursuance of budget announcement, a working group is sorting out operational details to introduce market-making framework to improve liquidity in corporate bond market. Additionally, SEBI and RBI are working together to introduce derivatives on corporate bond indices. Easier access for global capital. We have taken several steps to facilitate foreign investor participation. The Swagat framework provides a single window, streamlined onboarding experience for trusted investors.
Okay, that was the SEBI chair speaking at an investor summit here in Mumbai. You're getting all of those details right on your screen. Meanwhile, the RBI's latest measures could attract up to $50 billion in foreign inflows, supporting the rupee and boosting demand for government bonds. Piyush joining in with more details. Piyush, how much can the rupee strengthen?
The rupee can actually appreciate to the level of 92 to 93 versus the US dollar after we saw it crashing up to 97 level versus the US dollar earlier this year. The RBI and the government's combined measure is likely to draw in a lot of FPI investments into India's bond market and subsequently help Indian rupee to recover. What economists say is that the three major steps that the RBI and the government have taken with regard to the government waiving off taxation of FPI investment in G-Secs, RBI on its part coming and saying that FPIs can now invest in 15-year, 30-year, 40-year G-Secs, and RBI also saying that they will completely take care of the hedging costs. They will provide for the hedging costs for banks who are raising fresh FCNRB deposits of 3 to 5 year tenure. So overall combined, and the RBI has also gone ahead and actually made it easier for PSUs to raise ECBs. Combined, these measures are expected to fetch at least $40 to $50 billion on the lower end, and the expectation is that if the conflict in the West Asia region cools off, then the inflows could be even higher. More importantly, this could also lead the Indian government securities inclusion into the global Bloomberg bond index, which alone on its part can attract expect up to $25 to $30 billion of fresh inflows. This would, of course, come in the next financial year. What economists say is that by easing of the government security norms, the demand from FPIs will increase, the yield on long bonds will come down, and the government borrowing cost will also go down.
Yeah, it's an important point that you're raising. Thank you so much, Piyush, for getting us those details. We're joined today by Suyash Chaudhary, who is the Chief Investment Officer and Fixed Income at Bandhan EMC. Suyash, thanks so much for taking the time, and good morning to you. Your initial thoughts on the quantum that is anticipated to come through, and of course varied estimates, but $40 to $50 billion. Some are saying that this is a conservative estimate. Do you buy into that? What is your own assessment?
So, absolutely, the market is expecting somewhere between $50 and $80 billion. And these are very significant steps in total, in fact, exceeding what market was expecting going into the announcement of these events. I would also point to one other aspect, which is the statement of intent now being shown by Government of India and RBI in tackling the balance of payment deficit. So one is, how much money comes in through these measures, which is expected to be significant, as we discussed. But the other is that, the eye of policymakers is now squarely focused on the balance of payment deficit that India has now been facing for a couple of years. And, with the policy intent in place, it's a matter of time that we are able to solve for this, at least for the time being.
Okay, so then from that perspective, Suyash, you've already seen a bit of a cool off at the long end. I'm talking about bond yields. Do you anticipate that could gather pace? 1, 2, what are the levels for the Indian rupee that you foresee if these inflows were to come through? And you're talking about 50 to 80 billion. So therefore, the anticipation is more than certain conservative estimates have pegged it.
So if you, look back over the last couple of years, what has been the challenge for India's bond market particularly? So, nobody disputes that our macros are strong. Inflation has been reasonably well contained. Credibility of RBI in managing inflation is strong. Fiscal deficits are controlled, and credibility therein is also very strong. Current account deficit so far has been less than 1% of GDP pre-war. And yet, bond yields have struggled over the last 1.5 years. Our sense is primarily the issue was the balance of payment deficit. So, in economics and financial markets, we talk about something known as the impossible trinity, which means that, especially in an emerging market context, if you have a weak balance of payment and currency pressures, then it's very difficult for monetary policy to act alone on domestic growth inflation consideration. And this is primarily what we witnessed over the last 1.5 years, which is that despite RBI monetary easing, bond yields rose. Our sense is there are largely 3 attributable factors to this. One is higher global bond yields. Second is global competing themes for capital like AI, which is making the emerging market growth story that much less attractive. And third, more recently, has been the West Asia war, which has exerted further pressure on the balance of payment. Now, if these steps, and like we discussed, these steps are very credible, and one can even look forward to more, depending upon how the situation arises. If they manage to alleviate the balance of payment stress, then that will correspondingly also reflect in lower bond yields. Obviously, we need the other stress factors to also start to unwind, specifically first the West Asia war, and secondly, some pressure off the global interest rate market as well. One does look forward to these happening over a period of time, and therefore at this juncture, we remain quite constructive as far as India bond market yields are concerned. With respect to the rupee, more than level, one should focus on how much rebuilding of FX reserves can happen in the year forward, in the 3-4 months forward. And, so therefore, more than how much rupee can appreciate, one has to focus on how much more FX reserve recoupment will happen. And there one stands quite optimistic. We think most of this $50 to $80 billion will accrete to FX reserves of the RBI. So rather than rupee appreciation, I think the focus should be there.
So Yash, in the sense of what next. And even on Friday, this was being discussed that this is the next step for Indian G-Secs to get included in very important cohorts, right? The Bloomberg Index, etc. Is that now a clear path? And if that happens, does this quantum of flows that you're describing grow much more?
I would definitely think that should be the case over the next few years. Like your reporter was mentioning earlier, the Bloomberg Index inclusion will be a gradual process. So the flows related to that would happen over a period of time. At the same time, what India policymakers have shown on Friday is that we stand ready to welcome all, constructive capital flows, long-term patient capital flows into the country. And any deterrent to that is being systematically removed. So one is quite optimistic that over the next 2 to 3 years, the FPI inflow into the India bond market will resume again. This would specifically be more true if the rupee were to start to get anchored and global bond yields were to find some sort of an equilibrium level.
So Yash, thank you so much for joining in and giving us that perspective. Important story that we continue to keep tracking here on NDTV Profit after the government has opened the door for foreign investors, at least in G-Secs. The other space that is on radar is the auto sector. It remains in focus with double-digit sales growth in Q4, margin support from operating leverage, and the shift towards alternative fuels, which is also gaining momentum. We had the unveiling of E85 over the weekend, and it'll be interesting to see how the alternative fuel launches, along with OEMs launching models for these fuels, is going to change the scope. Pramod Amte will be joining us in just a bit. He is head of institutional equity research at InCred Capital. But before we go to him, Puneet setting the stage for that conversation. Puneet.
Well, thank you for that. Just 3 quick points because, one, we've seen launches by Hero MotoCorp as well as Maruti Suzuki in the E85 segment, as you rightly mentioned. So that is one of the key important aspects. We've also seen that, in the month of May, the FADA data, and we just discussed that an hour ago, has seen a meaningful growth in the CNG segment, especially at this point of time. So alternative fuels, cleaner fuels like CNG and EV share continue to show strong growth. And when it comes to the second key point, which is for InCred specifically, where they mentioned that they are preferring companies with a stronger supply chain as well as a better pricing power. And Eicher Motors and Maruti does come and focus on that 2 counts. They also have an ad rating on stocks like Tata Motors, CV, Ashok Leyland, Bajaj Auto, Hero and Samil, while having a reduced rating on stocks like Hyundai, Balakrishna, Escorts, TVS, Bosch and Excite, which is a lot of the export plays as well. And finally, one of the key major takeaways from one of their reports was volume-driven operating leverage helped Q4. The key question is if that helps in FY27 as well.
Okay, Pramod Amte, head of institutional equity research at InCred Capital, with us, deep expertise in this space per se. How do you, Pramod, thanks so much for joining in, of course. How do you see this piece moving ahead? Because global parallels range from having fairly high levels to lower ones as well. India is kind of sandwiched there, if you will. How do you see this moving ahead?
Sorry, you were asking about fuel options?
Yes, please. Yes.
So I think clearly as a part of hedging against the oil price, the push for flex fuel has definitely come through. Having said that, the flex fuel has its own challenges, even though many of the manufacturers have been having a technology or considering their exposure to the LATAM markets where the flex fuels are already accepted. So they have the expertise to work on the product. So hence it was quick to unveil the product. Having said that,
Pramod, I'm just going to stop for a second. We just want to hear the SEBI chief in conversation with NDTV Profit Limit.
You have to.
Okay, we seem to have lost that feed. We'll clip that out and come back to that. Sorry, Pramod, you were making the point.
So specifically in terms of flex fuel, so considering the lower price was the only debate which I think government has accepted and introduced the pricing, which is 82 rupees per litre versus 100 plus for gasoline, right? So hence in that context, still the payback period for the increased vehicle cost is still around 2 years. versus, like, for example, if you opt for an EV, which has a much lesser running cost, the payback period for incremental cost of vehicle is hardly around 6 months now. So in that context, still there is the threshold to be crossed other than the fuel availability. The second one is in terms of maintenance costs. The consumers are still not completely aware about how the maintenance of flex fuel vehicles will range because the water content is relatively higher, how that will be taken care of, any of the corrosion parts in the system. But I think the hope is clearly that the flex fuel penetration will improve predominantly in motorcycle segment, where the threat of EV is lesser or multiple fuel options. So that's how we will look at. Whereas EV options will remain as a predominant second option for either car buyers or to that extent the scooter buyers. And that's how we expect it to pan out as a multi-fuel options going into the future.
Pramod, for those people that are unfamiliar, can you explain this a little bit more? You've explained running costs, but essentially, is it because flex fuels have relatively higher octane, so more power, but they're not as fuel efficient? So you're basically buying more liters per kilometer, so the trade-off is not as much as some people would anticipate, right?
Yeah, exactly. I think if you look at the initial numbers or as you've compared the Brazil like product for Indian motorcycles, right? The fuel efficiency drop is anything significant, 20% plus, which has to be compensated either in the form of fuel price, right? Which I think government has taken an action to reduce the fuel price. But the taxation on E85 still remains as good as a normal fuel. So hence, there might be some work which can happen state to state based on their eagerness to go for a better, I would say, emissions. They can still tinker upon. I think if you walk another 5% more, then the payback period can further come down and the consumers can look at it much more favorably. But it has traveled a substantial distance versus what we used to look at 2 years back as flex fuels as an alternative. And will government take such a big cut on the prices, considering that they need to ultimately feed these prices into the agri economy?
Okay. Just the other point, Pramod, with regard to availability of fuel, right? Which is that if you would anticipate that blending of ethanol would need to take place at certain points, the OMCs have to be involved. So you're not going to have pan-India availability in any case. Or am I wrong? Is that going to be a key hurdle to cross?
Yeah, as I said, other than the maintenance cost, right, in the cost of operations, the availability remains a key thing. The better to move is more concentrated regions to experiment with, as we have seen in case of CNG, right? So the acceptance can come through initially for a few pockets, few segments of usage, and then take it up across the vehicle segment. Having said that, our initial estimates indicate that even if the E85 penetration is around 5% of vehicles by 2030, what you incrementally need is a 20% more ethanol to be blended into the system, which itself is a decent ask in the next 5 years period. So it's both availability of ethanol and the distribution reach which needs to be built up. But hopefully it is. It also involves a decent amount of work in terms of the blending at the stations and how that will pan out as we go forward.
All right, Pramod, thanks so much for taking the time for speaking to us this morning.
Thanks.
You know, who else I'm seeing adopting EV very furiously? It's the people that are delivering stuff to your homes.
Oh, yes, that's going to be the big one. Right in time to cue to the next conversation that we're playing out. So I had the opportunity to speak with Samir Kumar, who heads Amazon here in India. They finished 13 years, but more, I think, exciting from a news perspective is they've gone now full throttle into the quick commerce game. And I spent quite a bit of that interview asking him, why so late? Are you late to the party? You also had that comment from Dipinder Goyal in his interview to the Financial Times saying that we can outspend Amazon if we need to.
Wow.
So it's turning out to be an interesting space. We have news that Zepto will file for its IPO today. So just listen in to a slice of that conversation that I had with Samir Kumar of Amazon India, talking about what the scenario is looking like. He's, of course, the country manager for Amazon India. I was speaking recently to a high-level executive in the quick commerce space, and as one does, I was asking, so what's happening in your space, so much competition, etc. What do you think about Amazon and Amazon now? And his answer was, still some time ago, we weren't really looking at it seriously because even though Amazon is large, it wasn't moving fast in that direction. Now that they seem to have got their ducks in a row, we have to really watch and see what they do. Does that, from a potential competitor, does that sum up what's happening in a sense that Amazon has finally arrived at the quick commerce party?
I think I would not focus as much on competition. We always focus on our customers. And what we have spent so far is spend time building the right offering for our customers and get to the next 100 cities and 1,000 micro fulfillment centers. We have tried to enable the widest assortment, the safest possible operation, and at the same time, do it with the safest fulfillment centers or the micro fulfillment center that we have set up. We believe that in the near future, we will have the largest selection or the widest selection at the fastest speed for all our customers around the country. And if we do that, there's no reason why we shouldn't be winning the speed game while we continue to win on the selection as well as the value game. And that's what we are here for. So I do believe that we have the momentum and we really like what we have built so far. Our business is growing 25% month over month. And prime customers, which is our big differentiator, are shopping 3 times more frequently with us. So it's really exciting to see what we have built. But as we say, we are still in day one of our journey in India. And we remain excited about what's coming.
Yeah, no doubt about it. And this is something that Andy Jassy also said in the Q1 numbers. He spent some time talking about Amazon Now and about Prime. Quite exciting. But I have to ask, Amazon's been in India 13 years, global giant, right to win, some would say. First mover advantage. So I reiterate my question and forget about the competitors here. It's my question. Why so late to the party? The quick commerce fight was here. The battle was here to win long before the other people came on board.
I think it's not about being late to the party. We are in the party and we are here to win. And as we said, it's still day one for e-commerce, for online commerce around the world. E-commerce penetration around the world is less than 10-15%. In India, it's about 10-15%. So even for the speed offering of minutes delivery, it's early days. We have, and there's room for growth as we are seeing with our prime customers. They're liking what we have built. So I don't believe we are late. We have started our journey and we love what we are building, and we remain excited about what we're going to deliver for our customers in the coming months and years.
Yeah, when we hear and see in the media and an Indian company saying that we can outspend Amazon if you need to, and there's a published quote in the papers, there are 2 thoughts come to mind. One is how India has, in a sense, become the hotspot for this model of e-commerce delivery. And second, how the market is large enough to give space for an Amazon as well as local players to exist. How do you look at the landscape?
I think, first of all, you're right about the last point, that commerce or online commerce is going to be a very large segment. And there's place for multiple players. We focus on our business and we'll continue to build what is right for the Indian consumer. We have always prided ourselves on having the fastest speed, and we'll go ahead and do the same thing for our minutes delivery offering and make sure our prime customers get disproportionate value out of that.
Is there a question at all on cash burn, profitability, those metrics? Because this entire space is also looked at from that lens. And of course, for listed players in the Indian markets, it's a whole different ballgame, right? Average order value, gross order value. I'm just curious to know how you are approaching it right now.
I think we have always taken, for us, it's never been an either or. It's not growth or profitability. It's growth and profitability. So we have always taken that approach. In the current scenario, as we are scaling up our business, are we investing in India to build the speed offering? Absolutely. But do we keep track of all the profitability markers that we need to achieve? That also we are doing. Our startup team that's building this product and services, they are focused on execution. But as a leadership team, we look at it and say, as we build the business, as we scale our business, are we hitting those profitability marker? And to be very honest, for our first set of stores, we are very happy with the performance that we are delivering. And overall, as an Amazon India business, we are hitting our profitability markers as well. So it's never been one or the other, it's the both, and we are delivering on both.
Can I delve a little bit into that last point when you say that as a business, Amazon India is hitting its profitability markers? Because that's a bit of a hard goal to reach in a business which is still in a space which is still establishing itself. I'm still talking about quick commerce here. How are you doing it, and what color can you add in terms of any kind of details of those profitability markers?
I think, like, as you look at it, this business at retailing or e-commerce is a business of scale. As we scale our business, we get a lot of leverage. If you look at our flywheel, we lower the cost as we get scale. And so our goal is to first grow the business and become large, especially in this speed offering. As we improve our order density, as we get to more customers who are shopping with us, we improve frequency, as we called out, as we add more assortment, the average order value goes up. All of that will help us accomplish that, and we keep track of that, and we are happy with the progress that we make.
What is the strategy here? Is it more speed, or is it more size of inventory as far as this part of the business is concerned? Do you want to go wider, or do you want to go deeper?
I think, why do I have to pick one or the other? It's not an either or in this case either. Like, we want to offer the widest selection at the fastest possible speed, and that will be a differentiator for Amazon. We have always prided. Selection cross speed has always been our offering. So when we offer minutes delivery, we're going to offer that too, with the widest selection that's possible in those micro fulfillment centers. And then we'll take it to the hour and the day delivery. And all of that will be available to you. Like, as a customer, if you're making your last minute purchase or you forgot a gift you buy, you can buy that on Amazon now. But if you're planning a party at your home for the kids that are coming for a birthday, we'll have all the assortment that's from party supplies to balloon to utensils and all the other things that you need, including the return gift for your kid. We'll have it for 50 people that comes to that party, and that will be only available at Amazon.
What do you think is the next stage then? Right now, Amazon Now, Minutes is new and exciting, Prime is exciting. As you look at over the next 12 to 18 months, Samir, what is seizing your interest, apart from, of course, wanting to see all of these current projects through successfully?
I think it's continued to be the same. We want to offer the widest selection at the best possible value and the fastest speed. That continues to be our game that we'll play. Along with that, we'll continue to augment our Prime offering. We are also working on our low value selection, getting our penetration further into smaller cities. We have just announced investment of 2,800 crores rupees in our operations to expand our operations in set of cities. We are building fulfillment centers in tier 2, tier 3 cities. 70% of our Prime customers, new Prime customers, are coming from these smaller cities. So we're going to invest in Bharat more than India as well. So we're going to continue to do both. In terms of other investment, we're going to be big focus on AI, as we are going to improve our shopping experience and our selling experience, because our sellers it'll make it easier for them to sell on Amazon. We're going to make it easier for customers to buy on Amazon. And we're going to continue to invest in our tools and services.
You know, why is India at that focus right now, Samir? And I want to ask you a broader perspective. From Amazon's focus, where does India stand in terms of a market size, even an export platform for the rest of the world? For the longest time, India has been that story which is growing. Do you think that we've reached, after 13 years, from Amazon's perspective, that tipping point on where India is beginning to matter at the global table as well?
I think it continues to be, as we said, it is still a day one for us in India as well. We have very long-term focus. As Jeff called out a few years back, 21st century is India century. And we believe in that. Our leadership believes in that. So we continue to remain invested in India, and that's why we have placed another $35 billion in the coming 5 years. So it remains an important locale or marketplace for us, along with our investment in AI and data centers. So India is an important place for us and will continue to be important in the coming days and years.
Okay. While we're on the subject of quick commerce major Zepto is gearing up for its market debut. Sources telling NDTV Profit that the company will file an updated DRHP as early as this week. Rishabh joining in with those exclusive details.
Absolutely a very crucial development for India's quick commerce space. Also, the public markets will have one of the largest IPOs this year come out. Zepto is looking to raise about 11,000 crore, and the updated DRHP is expected as early as this week. What we're picking up is also, of course, the fact that the investor roadshows will start as soon as that updated DRHP is filed. What we're picking up is, of course, that in December last year is when they had applied for the IPO under the confidential route. They had received the SEBI approval to go ahead for the initial public offering, and now the updated DRHP filing is the next step, is the next natural step in the IPO process. What we're also seeing is that founders Adit Palicha, Kaivalya Vora will not be offloading any shares in the IPO. What we're also seeing is that they are looking for a July listing on the bourses. Again, looking to raise roughly around 11,000 crores, one of the largest IPOs this year. A little bit of information on their financials as well. About 10,000 crores or about $1 billion in net order value is what they've hit in the current quarter. Cash burn is also down from roughly about 200 rupees per order to about 120 rupees currently. What we're seeing in terms of profitability as well, the company has a timeline of roughly about 4 to 5 quarters before they're in a position to call themselves comfortable in terms of a sweet spot to reach break even across the company. What we're seeing is also that how Zepto's IPO will differ from Blinkit and Swiggy Instamart is that Zepto's key revenue metric will be net realizable value, or NRV. This will essentially be the net order value plus the sort of ad revenues that come in, because ads are also a major part of their revenues. That's what we're picking up on this quick commerce IPO that's set to come up.
All right, the space is buzzing. Rishabh, thanks so much for joining in and getting us those details. Certainly something to watch, and you can watch that right here. By the way, we're off the low point of the day for the benchmarks, and that's across the board. The Nifty 50 now trading with cuts of about 0.75%, and the mid-cap index off as much as 0.9% from the low that was hit in the first few minutes of trade, now trading with cuts of about 0.7%. So too the small cap index. We slip into a quick break. On the other side, we'll be in conversation with Hiren Ved of Alchemy Capital Management. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal, and we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day.
Back with India Market Open right here on NDTV Profit. Hiren Ved, Director and CIO of Alchemy Capital Management, joins us on the show today. Hiren, special thanks for accommodating our request at such a short notice, but it's a day that deserves that mention. Friday and Monday, the performance of the Nasdaq on Friday, the performance of Korea in today's session, does it lead you to believe that maybe, just maybe, the AI mania might now be getting arrested, or is it too soon to call that?
It's difficult to call. It's been a very powerful trend. Now, whether it's a pause or a reversal, it's extremely difficult to call that. But I would say that every powerful trend gets tested and retested, right? And just purely from market behavior, looking at past cycles like this, to me, it looks like too many people are in a hurry to call in a bubble on AI, right? And obviously, we've seen a parabolic rise in many of those markets and many of those themes like semiconductors, AI, and all of these will be tested at regular intervals. And until finally it reverses. Now, at what point in time it reverses, it is very difficult to call. But I think it is one of those phases where the strength of the narrative and the strength of the trend is going to be tested. And we must understand that whichever trend is so powerful as this is, there tends to be always a speculative fervor that builds in. And, that needs to be shaken up once in a while if the trend is to continue longer. But as I said, I want to caveat this by saying very difficult to call whether this is the reversal of a trend or just a correction within a longer trend.
Interesting. Hiren, morning, Alex here. So outside of what is happening around the globe with risk assets, what has changed for us here in India is actually the measures on trying to shore up the currency that were announced at the end of last week. And that has implications in a sense for flows into India and for the equity markets as well, right? Do you think that there is a possibility that an improvement in the fortunes of the rupee will also have a bearing on equity?
I think certainly, for foreign investors, stability of the currency is obviously very, very important. It is an important consideration for people who take an asset allocation call across markets. But currency is just one of the dimensions, right? Why foreign investors, buy or sell, or, there are several other elements also to it. But I think, to be fair, this was one of the very important macroeconomic parameters that needed stability. And I think the government and the RBI have moved with agility to address this, because this also has implications for generalized inflation in the country, because as the currency keeps depreciating, our energy import bill keeps increasing, and so also a lot of other raw materials and intermediate goods that we would still import, right? So I think some level of stability is extremely important. I think it's also a signaling mechanism, right? Sometimes one is the steps itself. The second is that there is a very strong signaling mechanism to the external world that is the government and the regulators, are they realizing the challenges and are they coming forth with solutions? I think once the market participants gets the sense that, the regulators and the government are on the job, that they are recognizing the challenges and they are coming up with solutions, that signaling mechanism to me is equally important than the reform itself, right? So I think we are therefore in a good place where, certainly there are challenges which have befallen on our economy, purely because of what is happening in the Middle East. And therefore, like at any other point in time in the past, we do have to address some of these challenges. And I think that is what we are addressing. That itself, to my mind, should be a big reassurance, for investors that steps are being taken.
Hiren, hi, Tamanna here. What you're saying makes perfect sense, but the fact is that the markets seem to be in a bit of a sulk with the expectations that, and what you said, that the government is on the job. Are we not seeing it yet, or are we not seeing it at all when it comes to equity investments coming in globally, or foreign investors coming in on equity? There seems to be nothing in store for equity markets to cheer about, apart from the fundamentals, which right now are just not standing up to all of these global headwinds.
So that's exactly what I said, Tamanna, that currency is just one of the pegs, right? Obviously, one of the things that global investors are looking at is India's relative growth compared to some of the other markets. And as you know, that, global capital is very, very mobile. It will go to places where it thinks that there is the highest perceived returns that they can make. And while India and its structural growth story continues to be attractive and strong, I think in the near term, it looks like that there are other distractions which are more profitable for global capital. And that's why global capital is going there. And until that entire cycle plays out, we can't expect to say that, I addressed the currency problem, now let's get the money, so the money has to start flowing into the equity markets. I think at some stage it will. What that stage is a very relative story, right? And we must also not forget that currently the world, not just the US, but the world is currently besotted with some very large IPOs that are happening globally, whether it is SpaceX, whether it is, the fundraising that is happening at Anthropic and OpenAI. So I think currently those are far bigger opportunities that global capital is looking to chase as compared to India at the current point in time. Now, does that mean that we will never be attractive? I think we will be, but at this point in time, I think there are other distractions that global capital has.
Yeah, it's like a vacuum sucking up capital. From the Indian investor perspective, Hiren, those who are really, looking at SpaceX and Anthropic from afar, when they look at Indian markets right now, what should they be saying? Should they be saying good valuations after a long time, companies available relatively cheaply, or should they be waiting and watching?
So, Tamanna, I don't want to kind of generalize valuations because today, if you were to look at purely historical benchmarks, then you could turn around and say that the large caps are cheaper and the mid caps are expensive. But it's not as simple as that. I think you have to look at it in relative to the earnings growth. And very clearly, quarter after quarter, the trend seems to be that the growth is actually in the mid market, right? And also in some of the small cap stocks. But you have to be a stock picker. This is a bottoms up market, in a market that hasn't gone anywhere for the last 2 years, right? The Nifty levels have been pretty much at the same level for the last 2 years. I think there have been several individual stocks which have done phenomenally well. So I think we are, we are in that classical phase where, because of macro concerns and because of, I would say, relatively slower growth in the large caps, we believe that it's not a market for investors who are looking at it top down, but currently it's clearly a market for those who are looking at it bottom up. So you have to find your areas of growth, and I think you will find them, and you have to position yourself rather than stressing about what's happening to the Nifty and so on and so forth. So this is clearly a bottoms up market. So top down, it will take some time for things to get sorted out. But I think bottoms up, the Indian market remains as attractive. I mean, just look at it, right? I mean, we have the same problems today lingering that we had, but the kind of opportunities that investors got in March, I mean, from there, many stocks have given 20, 30, 40, 50% returns, right? But you have to pick and choose.
You have to pick and choose, absolutely. Hiren, on that note, I wish we had more time, but unfortunately out of time today. Look forward to speaking to you really soon. Thanks so much, as always, for speaking to us. All right, before we end though, NDTV Profit caught up with the SEBI chair at an event locally here and spoke about Rajesh Exports. This is my colleague Nimit. Asked him about Rajesh Exports, and Mr. Tuhin Kanta Pandey saying that order is in place and law will take its course. Listen in as we end this program.
Has SEBI made a mistake with Rajesh Exports? Is what he's claiming. He's claiming that everywhere, that SEBI has made a mistake with the numbers when it comes to Rajesh Mehta.
See, as a matter of principle, on individual cases, we don't really comment on the media. Actually, this is a quasi-judicial process in which orders are issued and they have to be accordingly complied with or gone through in a manner which has been provided as per the law. So there will be no comments from my side.
Okay. With that, it's a wrap on India Markets Open. Just pull up the markets before we go into that quick break. Yes, it's continuing to be a tough day, but definitely improvements from the lowest levels of the day. We're still about 190 points down on the Nifty. Healthcare is holding up the best in relative terms. We'll take a very short break, but we'll be back right after with Ask Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
This is where the future shows up first. Conversations with the biggest names in tech and AI. putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal. And we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be a chair.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri. With me, as always, is Mahima Vachjani. And over the next hour or so, we'll try and solve those stock-related queries. But before we do that, a very quick check of how the markets are doing, because it's been yet another day where you've seen a 100-point recovery from the day's low or the day's open. In this sense, of course, a very, very weak handover from the global markets. Friday, you saw Nasdaq was down 4%. And that carried forward through with the weakness that we saw between ties between US, Israel and Iran, and that had a hampering on the implied open. It started off, the implied open indicated a 300-point downtake at 150 points. At this point of time, we'll take it with both hands, but hopefully a recovery expected to be seen essentially at this point of time in the second half of today. We've started that very, very meagerly at this point of time, but yet again from that 23,100 odd level that we were, we've seen a 100-point buying as well. When you look at the heat map, also largely a red screen at the start. You just had a couple of names in the green at 9:15, and now that's starting to inch up and spread across as well. So Max Health, Power Grid, Apollo Hospitals are the top gainers, while you're seeing some movers other than ONGC, Sun Pharma also in the green. But Wipro again continues to be down almost 5% in trade today. Indigo as well as Mahindra & Mahindra are the other losers, but Wipro continues to be the second straight session of weakness seen in this counter, and now around that 188, 187 mark as well. So multi-year low for Wipro today. In terms of the sectoral though, it's not as straight through because you're not seeing a particular sector and all those stocks being down in trade today. So while the metal as well as the Nifty auto and realty, which are taking the casualty of today, the rest of them are still trying to find their way back in the green, and the advanced decline ratio also for the broader markets. And we put out this piece in the morning as well that the mid caps have far more outperformed compared to the large caps, but today it has been an underperformance across the board. So you're seeing almost 1,800 stocks Mahima decline in trade today, while the advances, while slowly inching up, still continue to be under pressure.
Yeah, absolutely. And the mid-cap 150 also, I mean, it's down by about 0.5. I think it's important to note VIX as well because it's up 7% as we speak, and that indicates the kind of volatility that we could expect. There you go, 7% of an uptick spike is what we're seeing in India VIX. But overall, the broader end of spectrum largely in line with what the benchmarks are doing at the moment. The mid-cap 150 is down by about 0.5%. The small-cap 250 is down by about 0.6%. Let's try to pull up the BSE 500 and see as to what names specifically are buzzing. There you go. You have a lot of tech names again. Wipro topping that BSE 500 chart, down 5%. Sterlite Tech now I think is on the downward trend is what we're seeing. Second straight day where we're seeing a lower circuit on this particular counter. HFCL is the other one which has seen a significant rally and now seeing profit booking. Rajesh Exports yet another day of lower circuit. And on the flip side you have something like a CCL Products which is doing fairly well, up 4.8%. Kaplan Point, Balaji Amines, Aster DM, Z Entertainment, all of these in that range of 3 to 4% of gains. So that's with regards to where some of these names go in the broad end of spectrum, but it's time to take all your stock related questions, and let me welcome in our guest for the day, Saurabh Jain, Equity Head Research at SMC Global Securities, and Gaurav Sharma, Associate VP and Head of Research at Globe Capital, joining us now. Welcome to both of you gentlemen, and a very good morning to the both of you. The first one that is a query on V2 retail, which is from Gaurav, who's writing us from Bengaluru. He's saying that he's holding 300 shares at a price of 210 and wants a technical view on this particular counter. He's sitting on a profits of around 11,000 rupees. So, Gaurav, your view on the charts for V2 retail?
Hi, Mahima. Very good morning to you. Good morning, Saurabh. So V2 retail has done well, has rallied from close to 180 levels to currently close to 250 odd point. Our viewer is making a reasonable profit. I'll advise him to take some part profits here because the current range is where at previous occasions the stock has found certain resistances. Once the stock manages to go past 250, 260 range, the next target territory would probably be close to 285. So part profit and a trail stop loss closer to 235 is what I'm suggesting.
Got that view, Gaurav, but let's go across and take another question now. And viewers, you can call us as well as send in your stock related queries on numbers. Both of them are flashing on the top of the screen as well. Now, Nitika from Pune is asking us this question on Tata Capital. She's holding shares at around 326. Saurabh, her question being that fundamentals look strong, but stock's not gone anywhere too much, right? I think a lot of it was priced into the IPO. Would you recommend her to continue holding at this point of time?
Hi, good morning. I think while the valuations have corrected, but I think the street lacks, street is not excited about this segment, and the initial issue was highly priced. I think it is a matter of time, and I think it is better to wait.
Okay, all right. The next one that we have is from Sunil Kumar, who's writing us from Vishakhapatnam. He's asking about Anant Raj. He's got around 100 shares at the levels of 650 and wants to know whether he can hold or exit. Gaurav, your view on the charts on this one?
Anant Raj is a clearly hold. A steep uprise witnessed in the last week, some correction thereafter. I think this is an opportunity to even add up to some of the position. 500, 520 is a very important, strong support for the stock. So hold is what I'm suggesting.
Saurabh, also if your view as well, because Vanita Bala had also asked a similar question. She wanted to take some exposure in the data center field. So Anant Raj, she'd also let out some names like TD Power, GE, Vernova, TND. Any of those that you like from this space? I know there's not a direct stock exposure you can take for 100% data center exposure, but any of those that you like right now?
See, all the stocks that you are talking about are exciting. In case of TD Power and the GE Vernova, the stocks have run up quite well, and the valuations have also already got a bit stretched. I think taking position in all three makes sense, but that too in a staggered manner.
Right, okay. I think we've got Param waiting by, calling us from Pune. Param, very good morning to you. What's your query about? Hi, Param. Can you hear me? Okay, I think we seem to have lost him, but I think we do have his question. He wanted to ask whether this is the right time to enter HDFC Bank from a long-term perspective. Saurabh, your view on HDFC Bank, is this the right levels to make an entry from a long-term perspective?
From the long-term perspective, banking stocks looks good. In case of private sector bank, the valuations are really asking, but I would prefer ICICI over HDFC Bank. So my sense is better to get in ICICI.
Is what Saurabh is preferring at this point of time, and HDFC, continues to be under pressure today. Hit a low of 736 and seeing some buying from there as well. So that's on HDFC Bank, and it's a query we get a lot of query on. Its stock we get a lot of queries on as well today as well. One of those, but Birendeep Singh is asking the next question, and he wants a view between Keynes Tech, Data Patterns, or Astra Micro. What's a better pick for the next 3 to 4 years? Saurabh, Keynes Tech, I think, has had its obvious issues in Q4, but within the three names, is there anything you like for the long term?
I think in the long term, yes, it makes sense. For the long term, it makes sense to get into a company like Data Pattern, maybe. But the valuations are really high, even after the corrections. So the stocks have recently seen quite a run-up. Since you are viewing it for the next 3, 4, 5 years, in my opinion, you will get better days ahead. Because in the broader market correction, these stocks will offer you a good entry point.
Okay, all right. We've got Sudhakar Joshi calling us from Sambhaji Nagar. Sudhakar, a very good morning to you. What's the query about?
Good morning. I'm having Lupin, 166 shares at 820 rupees.
Of Lupin.
What shall I do? Shall I sell it or hold it?
Okay, Sudhakar got your question, and I believe that he's been holding this from a really long time and wants a long-term view on this one. Saurabh, I'll stick with you again. He's already sitting on a profit of over 2.4 lakhs. He's bought Lupin at very attractive levels. Do you think he should continue to hold or book partial profits?
From the long-term perspective, pharma still looks quite attractive to me for the next 3, 4, 5 years. A lot of drugs are going off patent. Recently, GLP-1 has offered many opportunities for the Indian pharmaceutical companies, and a lot of drugs will be there going off patent. And many of the companies are working on to newer molecules. Lupin is a very fine bet. On the valuation side, also it looks inexpensive. So my sense is better to stick with it for the next 3, 4, 5 years.
But also, Saurabh, since you're speaking about pharma, Padma from Bangalore also has a similar question between Sun Pharma, Glenmark, and Wockhardt. What's a good bet for the next 2 years? You gave your view on Lupin. Either of these three on your radar as well?
I think out of the three, Sun Pharma looks very interesting to me.
Let's go across and take another question now, and this one's on Fractal. Our viewer is holding shares at 996, and this is Mr. Mukherjee asking what could be the prospects in the next 6 months or so. Gaurav, I know it's a very, very recent listing, so not too much historical data, but any view that you can give on Fractal?
See, the kind of business line this company is into looks quite promising. The company has also managed to post a reasonable set of results in the previous quarters, including the latest one. On the charts also, the stock is fairly placed in. Chart structure is good. From 6 months perspective, the first important thing would be this stock surpasses the previous high, that is close to 1100 odd levels, which looks pretty much possible. So I'll ask the viewer to hold on to your position. Slight bit of decline in the immediate near term towards 900 odd levels, that is pretty much possible. So he can even consider adding up their positions there, taking a closing stop at 860.
Okay, all right. We've got Ajay calling us from Hyderabad. Ajay, very good morning to you. Go ahead, ask your question.
Happy morning to all. I'm from Hyderabad. I'm holding 4,500 shares of Pine Labs. For the past 2-3 weeks, many people are buying these shares, like volumes are going up, but it's going up. I want to know both fundamental and technicals. Is there any rally, short-term rally? Can I?
ठीक है, Gaurav, got your question. Sorry, Ajay, got your question. I'll take this up with Gaurav. Then Gaurav, he's looking at volumes and saying that volumes are spiking for Pine Labs. Do you see any action in the chart specifically for this one?
Very rightly mentioned by the viewer. Yes, indeed, volumes are spiking up for Pine Labs, but no meaningful activity is registered on the price front. I'll suggest the viewer to hold on to the position here, and a break above 150 to 153 will quickly take the stock towards 170, 180 zone. So hold is what I'm suggesting. Do maintain a stop at 135, as the stock is overall in a downtrend. It has not performed since listing. It is hitting lower lows. Otherwise, I would have outrightly suggested to exit the position. But yes, a mounting rise in the volume are suggesting a little bit of accumulation. Let us wait for some more time and see if this turns out into a breakout or not.
Got your view, Gaurav. But let's go across to Sharad now, who's joining us to give us a perspective on the BSE F&O setup. Sharad, over to you.
Thanks a lot for that. And of course, initially we had seen a big, gap down opening, and that has actually continued. Nothing major happening in terms of gainers. A little bit of buying in Power Grid and Tech Mahindra, Bharti Airtel. But look at the sell-off. The sell-off definitely has a larger players also. Bajaj Finance, M&M, Interglobe Aviation, even Reliance not actually giving a proper support. Now we'll be looking at some lower levels now from these levels, because the important support levels have been broken, at least in the initial hour of trade. Also, let's look at stock specific moves, what's happening here. Let's see the long build up. Largely we see pharma and the hospital stocks, the defensives play. That is where a little bit of buying is happening, or the street is trying to find some solace right now, seeing the volatility in the markets. Fortis Health, Max Health, both of them up between 2 to 3%, but not that convincing, as the setup is slightly towards the negative side. Voltas and Power Grid also we see some good buying happening. Voltas on back of the management meet, and we had already mentioned earlier that there was some market share gains also happening in the month of April and May, and that's why the stock is also up almost 2%. Long unwinding, we have Amber Enterprises and Kalyan Jewellers. And if looking at the short build up, a big sell off of course is happening in both of these capital good players, and we had seen this happening last week also, a little bit of profit booking. So that has again started continuing for both GE Vernova as well as Hitachi Energy. So these are the stock specific moves in the F&O space.
Well, thanks so much for that, Sharad. But let's go across to another query now. Rajiv is asking a question on NMDC. He's bought the shares at 78 and holding 200 shares. Gaurav, is it a good time to continue holding the stock now or booking profits? What would you recommend for Rajiv?
I'd suggest the viewer to hold on to the position. This decline is a welcome move. Further slide towards 88 odd levels will bring the stock towards a very strong support zone. So buy and accumulate on dips is what I'm suggesting.
Next one is on Natco Pharma. Our viewer Govind from Hyderabad has bought at the levels of 1,050. He's holding 1,000 odd shares. Wants to know if he can go ahead and add more or book his losses in this one. Gaurav, I'll stick with you again for this one. Do you think the charts can bounce back from here on and bring, Govind back to his levels of 1,050, or should he book his losses?
I'm not really sure on that front. The stock has witnessed very steep sell-off. That's a straight decline from 1,200 to currently below 900 odd levels. So it'll be a wait and watch. We'll have to see for some more time whether the stock holds around these levels or not. It is better to take a stop at 840 for now.
Well, it's now time for the rapid fire round in this edition of Ask Profit. Saurabh as well as Gaurav, you know the drill. The first question coming in on Bajaj Finserv. Gaurav, our viewer Sai Karthik is holding shares at 1705 and asking what's the 3 to 6 month view. Is it a good time to add at this level?
Absolutely, should consider adding it for a 6 months perspective. Take a stop at 1600.
Okay, 10 shares of Walkhard is what Gayatri bought at the levels of 2144. Continue to hold, Gaurav?
Absolutely, even buy on dips.
Got it. Sumedh Lakhar from Maharashtra wants to buy into Federal Bank. Would you recommend that, Saurabh, at this price?
Yes, he can buy.
Hindustan Copper, Gaurav wants to know whether he can go ahead and buy at the current levels from a 2-year perspective. Saurabh?
Of course, he can buy.
Venkat Ramani from Bengaluru wants a view, Saurabh, between Minda Corp, Sona BLW and Motherson. He wants to invest 2 lakh rupees. Should he distribute evenly or what's the preference?
Better to distribute evenly.
Kalyan Jewellers bought at the level of 370. Wants the technical view from 2 months perspective. Gaurav, your view on the charts?
Take a stop at 335. Hold your position. Book somewhere close to 450 odd levels.
Okay.
Sagar from Bengaluru wants to buy into Fortis Healthcare for the next 2 to 3 years. Saurabh, should he do that?
Better go for Apollo Hospital or else Fortis.
Okay, HFCL bought at the levels of 82 since April 25. Our viewer Vishwanatha Reddy wants to know whether he can continue to hold or sell. Gaurav?
Stock is into a lower circuit now. Utilize any move to book your position.
Next one's on ITC Hotel. Mr. Agnihotri is holding shares at 161. He's a short-term investor. Gaurav, should he continue to hold his 700 shares?
Better to use shift to Indian Hotel.
Okay, KC International. Preeti from Bengaluru wants to know whether she can continue to hold this from a long-term perspective. Her buying price is 563. Saurabh?
Better to exit. Stock is underperformed.
Is it a good time to buy into Acme Solar post, the QIP? Saurabh is what Murli is asking.
You can buy in staggered manner.
Okay, the next one that we have is on Ashok Leyland. Our viewer Vijay Kishore has bought 702 shares at the levels of 257. He wants to know whether he can hold, sell, average out. Saurabh?
You can average.
Next one's on Reliance, bought by a viewer, Sai Reddy at 1324. He wants to know, Gaurav, what should he do in the short term?
Better to exit. Stock can further underperform.
Okay, is it advisable to purchase BSE at the rate of 3850 is what Kesavra wants to know. Gaurav, any view?
Yes, if the stock falls to that level, he can consider.
Next one is coming on JSW Cement. Our viewer Sudhakar from Bangalore bought shares at the IPO price of 147. Saurabh, what would you recommend? Should he shift to any other cement company or continue holding?
If you want to shift to Ultratech Cement or otherwise stick to this.
Okay, is it the right time to enter Titan from a long-term perspective, Saurabh?
Yes, you can.
The next one, that's coming in, it's on PNB Housing. Amit Murkute wants to know, Gaurav, your view. That's now that the stock's corrected over the last 2 to 3 weeks, is it a good time to buy?
A further slide toward 920 is what I can sense. Buy on dips in a staggered manner is what I'm suggesting.
PLS International from a 1-year perspective, is it a good buy? Satya Narayan wants to know. Saurabh?
Avoid.
Next one is on TCS. Umesh bought shares at 2730 and has been holding for a little while. Should he continue to do that, Saurabh, or switch out?
Switch.
Got it. Well, that was the end of the first round of the rapid fire as well as the first half an hour of Ask Profit. Gaurav, we'll let you go on that note. Thanks so much for joining in as always. Saurabh, stay on. Lot more stock related queries on the other side after this very short break, so do stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal. And we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. How are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury, and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business Leadership Awards. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy
Welcome back. You're watching Ask Profit here at NDTV Profit. By the way, for viewers who are just tuning in, you can either give us a call or send us your stock-related queries on the WhatsApp number that's flashing on your screen up there. And on this side of the show, to answer all your stock-related questions, we are now joined by Ajit Mishra of the SPP Research at Rediger Broking, joining us now. Ajit, a very good morning to you. I'll start taking, I think, our first caller on this side of the show. We've got Bhaskar, I think, is waiting by, calling us from Hyderabad. Bhaskar, a very good morning to you. Go ahead, ask your question.
Good morning. I'm holding 20 shares of BSE at 3,800. I want to know the technical for short term.
Okay, all right, Bhaskar, got your question. I'll take this up with Ajit. Ajit, he's holding 20 shares of BSE, bought at the level of 3,800. What should he do?
Yeah, good morning, Mahima. So, Mahima, my suggestion to Bhaskar is to maintain a stop at 3,700 mark. Means the stock is witnessing a bit of a profit taking after this sharp up move. So consolidation is more likely. The stock is currently hovering below its 20 EMA mark. So let's say once we reclaim 4,011, then probably it might again witness fresh buying interest. So above 4,000 mark, 4,200, 4,300, that's the immediate target that we are eyeing the stock. So with stop at 3,700, he can continue to stay put.
Got that view. Let's go across and take another call now from Bengaluru. And Venkatesh has a stock query for us. Venkatesh, very good morning to you. What's your query?
Good morning, everyone. So I'm holding Sirma SGS at 600 level. I see the rally is okay for me. And shall I book profit here and switch to KNS, or I still hold Sirma and buy KNS?
Sorry, Venkatesh, do you want to, is the second stock that you're looking at is Keynes Tech? Is that the other one that you're talking about?
Sirma.
No, Sirma, I know, but you want to sell Sirma and buy Keynes. Is that the stock that you were talking about?
Yes.
Yes, yeah. Okay, got it.
Or hold Sirma but buy KNS.
Got it.
Is it right time for KNS?
Got it. Well, Saurabh, we discussed the EMS pack a little while ago, but, Sirma, the rally has just continued, right? I think the results also have been strong. Would you just recommend Venkatesh to continue holding Sirma and, if at all, venture into Keynes Tech?
My advice would be, if you are having seriously a long time frame, like more than 2 years, then you should stick with Sirma SGS. The stock in the short span has moved approximately 100% in last few months, and the results and the sector is quite attractive. So my sense is, if you wish to hold for another 2 years, then you should hold Sirma SGS and do not venture into the other stock.
Okay, all right. The next one that we have, I think Bharat is calling us from Andhra Pradesh. Bharat, very good morning to you. Go ahead, ask your question.
Good morning, madam. It is right time to enter MTAR Technologies.
Okay. What time period are you looking at, Bharat? Is it the charts that you saw, or are you seeing the fundamentals?
3 to 6 months view, madam.
All right. Okay, then I'll take this up with Ajit. Ajit, do you think it's the right time to enter the stock?
So, Mahima, after this sharp run up from roughly around 3,500 to 85, it was almost a vertical rally. And now we are seeing that the stock has been witnessing a bit of profit taking. The stock today, in fact, has slipped below its 20 EMA mark also. Where we close, that is going to be important. But broadly, indications are pointing towards consolidation or maybe some profit taking. So he should wait, let the stock stabilize. Let's say any dip towards 6,500, that's a good area to look at. And, on the higher side, 8,000 is the strong hurdle now. So until we break that, consolidation bias likely to continue in the near future.
I think everyone's looking at MTAR Tech is just looking at the technicals right now. No one wants to even know what the fundamentals are of the company, but stocks up 300% in the last 1 year. And I'm sure that, all technical experts as well as fundamental experts have been asked this question in this year itself. Stocks been up almost 200% as well. But one stock, though, that's not doing well at all is Wipro. And viewer Harsha from Vijayawada is holding shares at 260 rupees per share. So currently sitting on massive losses there. Saurabh, there has been, the stock's almost slipped 30% in this year itself. And there seems to be no respite, right? I think this is one of the biggest challenges that the company has seen over the last 1 or 2 decades. Would you just advise Harsha to switch out and probably look at some other tech name if she wants to venture in, or just completely avoid the space for now?
I think if you look at the recent quarterly earnings, all the companies have disappointed clearly on the projections front, on the expectation of the growth that they have guided for the current financial year, despite on the a lower growth base for the last 3-4 years. There was expectation that these companies would probably see good growth on a low base, but that is not the case. And we are seeing continuously selling in the bigger names like Infosys, TCS, Wipro and all. So my sense is it is better to avoid this sector. My advice would be cut off your losses and park your money in the maybe utility space, capital goods or pharmaceuticals.
Okay, all right. So that's the view coming in on Wipro. The next one that we have is on Bandhan Bank. Mr. Pillai, I think, is writing us from Kerala, and he's got 200 shares with levels of 206 that he bought 1 year ago. He wants to continue to hold this for 1 more year. Wants to know whether he can do that or not. Ajit, your view on the charts for Bandhan Bank?
So, Mahima, after the initial consolidation post-listing, the stock has been trading with a negative bias for almost, nearly 5-6 years now. And finally, but we are seeing some bit of silver lining, means after spending almost 5-6 months under this broader consolidation range, 140, 180, finally, we are seeing the stock is trying to make a decisive attempt of reversal. Means it has reclaimed the long-term averages on the weekly chart. And the good part is that at least this time around, we are not seeing selling pressure emerging at the higher end. So probably, yes, he can continue to hold his position, like what the kind of reversal that we saw in RBL Bank last year. The similar kind of a possibility is also there for Bandhan as well. So now once 80 is a strong base area. So with that as a stop, we can continue to hold. Gradually, 250, 260 is something that the stock might attempt in the coming months.
Got that view, Ajit, but let's go across, take another caller now from Hyderabad, and Murlidhar has a stock query for us. Murlidhar, very good morning to you. Welcome to the show. What's your query? Hi Murlidhar, am I audible to you? Well, we seem to have lost him, but we do have a stock related query on PNB. He's holding 300 shares at 78 rupees. Saurabh, would you just recommend him to continue holding this counter at this point of time?
I think it is a good counter to hold. Our view is positive on the banking sector, and PNB in the PSUs makes sense to hold.
Got it. Well, another question, Saurabh, on Hero MotoCorp, and this is from Mr. Iyengar. He wants to know what's the long-term view. He's bought shares at 4,800. Saurabh, I think this is the second time where we've seen the stock cross that 6,000 or get close to that, and then see a sell-off. I think the last time it happened in September 2024, and we, of course, saw the broader market correction then. But what's your view on the stock now? Because we've seen fuel price hikes starting to come in, impact the companies as well. Do you feel that the lower end segment will start to see that impact first? And what's your view on Hero MotoCorp now?
See, this can happen with the industry, but the material cost, the fuel cost. But overall, if you look at the management body language and the monthly numbers, or for that matter, quarterly earnings season, this is happening across the industry. So my sense is, if you want to be in for the long term, yes, you can hold.
All right, we've got Sanjay who's calling us from New Delhi. Sanjay, a very good morning to you. Go ahead, ask your question.
Yeah, my question is on Yes Bank, which I bought it in last year, October, at 23 rupees 50 paisa, the same price which is prevailing right now. What should I do? No profit has been made and my funds has been stuck over there for more than so many months. So shall I quit or shall I wait for any profits? Is there any probability of going up? I wanted to know 5,000 shares of Yes Bank at the rate of 23 rupees 50 paisa.
Okay, Sanjay, I got your question. I take this up with Ajit. Ajit, do you think it can rally from here on, or should he book the losses that he's sitting at? It's hardly 250 odd rupees right now, but he's made no money since a year is what his concern is. What do you suggest?
True, Mahima, means the opportunity cost is something that he has paid. And now it is visible that he wants to have a clear view that whether it's logically to hold this stock. So in past also, Mahima, around this level close to 24, 25, we saw that stock failed to hold. And this time around also, we are seeing that at least is making an attempt. Volumes are okay, but a decisive trend reversal is still not in the sight. Means, let's say in case if it crosses 24, then 26 is going to be the next hurdle area. So in my opinion, in case if we can take a call and switch to Federal Bank, which is outperforming within the banking space, stock at the record highs, volumes are very strong, technical pattern breakout. So if he may consider this opportunity to liquidate his position at current level in Federal, this Yes Bank, and switch to Federal Bank with a 3 to 6 month of time horizon.
Got the view, Ajit. Ajit, another question between AMC counters now, HDFC AMC versus Nippon AMC. What's a better stock in terms of chart performance, and what's a better pick right now to enter, is what Uma from Bangalore is asking from a short to medium term perspective.
AMC counter at large, Puneet, doing well. Means Nippon is currently hovering around its record highs, and short term, but we may see some consolidation or some profit taking. So in my opinion, she should consider accumulating on dips instead of buying at one go. So this range close to around 1,000, 1,050 is the good area to look for fresh buying in Nippon, with 900 being the base. So that will be the stop, and 1150, 1200, that's the position target area. HDFC AMC, it might witness further profit taking. So maybe around 2200 mark, it's a good buy.
All right, so that's the view coming in on both of these, and it's clear on the charts, right? One is clearly moving upward, and the other one is clearly moving downward. So there you go. The charts represent the mood of both of these counters. But the next one that we have is on Reliance. Bharat wants to know if this is the right level to enter Reliance into. Ajit, your view on the charts for this one?
So maybe it's tricky because last time also we were at this level in the month of April, and from there we saw a rebound. But this time around we are not seeing buying interest emerging as such, even after retesting those zones. So maybe we may see further dip towards, let's say, around 1200, 1220 zone before any meaningful recovery. So in my opinion, accumulate on dips, not to jump into a trade at current levels, because the upside is going to be capped also. Means 1320, 1370 is the area basically where we have multiple resistances in Reliance. So in case the view is short term, we have better counters to trade in. Means focus should be more on pharma and healthcare basket. So stock like Fortis, SRDM, Apollo Hospital within this space, and then we have Federal Bank, RBL Bank, where if the view is short term, at least looks comparatively better.
Got that view, Ajit. But let's go across, take another caller now from Mumbai. And Vinay has a stock query for us. Vinay, very good morning to you. What's the query?
Good morning, sir. Good morning, everybody. So I hold 100 shares of Fortis purchased at 923. I wanted to know from you whether I should sell or hold, given that the stock has rallied quite a bit this morning.
Got it. Well, and what's your time frame here, Vinay?
I don't have any time frame in particular, but the share didn't move for a while, and today it's rallied a bit. I have a 2-year. I can hold on for 1 to 2 years.
Got it.
But I want to know from sir whether I should sell or hold, given the stock has moved significantly today.
Got it. Well, we of course got Ajit's view just right now on Fortis. Saurav, I think you also mentioned that you would prefer Apollo over Fortis. Does that view? I'm guessing that view stays, right?
Yeah, of course. If he wishes to stay for long, better pick is Apollo Hospital.
Well, the other question, and also this is a very interesting one, because we've been getting a few queries on Oracle Financial, but Satpati from Bangalore is holding 87 shares at 8150. Now, so he's clearly in the profits. And what is, he's mentioning that with his limited understanding, the technicals do look strong, but he wants to keep this stock in his portfolio for the next 5 years. So Ajit's question being, is 15,000 a good long-term target? I think we've had a lot of stock queries on this one, but this is a very interesting way, because he has a target in mind, he has a 5-year time frame, and while we would generally get Saurav's views on such a long time frame, anything on the charts, because he's looking at that right now?
So Puneet, definitely, because see, when it comes to relative strength, is something that the stock has been outperforming the sector by big margin, and still we are not seeing any sign of cool off, despite the recent selling pressure that we are seeing in the IT pack. So this definitely shows a potential of gradual up move even from current levels. So 15,000 maybe higher is something that the stock might test once, let's say, we cross the previous record high close to around 12,000. So in that case, probably around 16,000, 18,000 could be the probable range which the stock might test basis the past price action that we have seen in the stock once it surpasses its record high. So definitely he can continue to hold his position, and 8,000, 8,500 is now the immediate base, strong base for the stock.
Okay, all right. So that's the view on Oracle Financial Services. The next one that we have is from James, who's writing us from Hyderabad. He's asking about M&M. He's got around 300 shares at the levels of 3,400. He wants a short-term view again on this one. He's sitting on quite a big loss, Ajit. Around 1.2 lakhs is where his losses sit at. But what would you recommend seeing the charts?
So Mahima, after this recent fall, means we are again trading closer to the April month lows, but we are still not seeing any decisive sign of rebound. In fact, if you see the auto pack also, if you exclude a couple of names wherein we are seeing relatively better strength like iShares, TVS, majority of the counters are witnessing profit taking and consolidation. So that holds true for M&M also. So in my opinion, 2,900 is the strong base area. In case if it breaches this decisively, then it's prudent to at least liquidate the position 50% around that area, because possibly around 2,700, 2,600 is something the stock might test. To negate this bias, we need to coop all the losses that the stock has witnessed in the last 3-4 weeks and surpass this hurdle of 3,200 decisively. Then only we can see a rebound attempt. So consolidation with the negative bias is more likely in the near future.
Got that view, Ajit, and it's definitely a stock we've been discussing so much over the last year or two on this on the show, and it's always been a very constructive long-term view that most investors, of course, have gotten from our viewers, from our experts as well. Now going through consolidation, as Ajit also highlighted. But the next one, it's a very interesting question now on Aditya Infotech. Sagar bought shares at 1,015. So he's in massive gains because he also topped up on the first day post-listing. And his question being if there is any more, at the current price, any more upside from these levels. He's also guessed the KYC tease that's going on. And Sagar, you are right. I'm not going to spoil it for the others. But what would you recommend here, Saurabh? Is it a good time to book out of Aditya Infotech now that he's bought at 1,015? Valuation is also getting expensive.
I think valuation is quite expensive, trading around 130 times to trailing earning, 27 times to book value, and 40,000 odd crore market cap looks seriously expensive. I think it is a time to exit.
Got it. Well, let's go across and take another caller from Bengaluru. Srinivas has a stock query for us. Srinivas, very good morning. What's your query?
Hey, good morning. The query is regarding Vishal Mega Mart. I'm holding around 8,000 shares at 123. I bought this in the view of 6 months to 1 year.
Okay.
So is it a good counter to hold for 1 to 2 years, or there are better counters where we can get into as long as consumer space is concerned?
Got it. And did you buy this with so you mentioned a 6-month view, so you bought this very recently, right, Srinivas?
I bought it maybe 1.5 months back.
1.5 months back, got it. Ajit, on Vishal Mega Mart, we've seen stocks been actually very volatile and seen buying at the lower levels, but has tested those levels as well, close to 100. What's your view on the stock now?
So Puneet, consolidation is more likely because we are not seeing selling pressure also emerging after the failed attempt of this reclaiming of its long-term averages. So broadly in this band, close to around 115, 110, that's the lower band, and close to around 125, 130 is the upper band. So within this 20-point band is something the stock might continue to hover, is what the indications are. So if you be short term, my recommendation is to look for exit opportunities even at current levels and wait for a decisive close above 130 levels to re-enter.
Got that view, but let's go across, take another quick caller from Gujarat. Bharat has a stock query for us. Bharat, good morning. What's your query?
Sir, good morning. And my query is, I want to buy ICICI Bank share at this level.
Okay.
And should I prefer it over NDFC Bank?
And what's your time frame, Bharat? Is it a long-term bet?
Yeah, long-term. There is no issue. I'm not in a hurry to sell it.
Got it.
But if I am getting a good profit, I can sell it.
Got it. Well, Saurabh, I think we posed you a question on HDFC Bank, and I think you mentioned your preference towards ICICI Bank. I'm guessing that still stays. And what's a time frame that you think that long-term investors should look at?
I think anything time 3 to 5 years is a good time to hold ICICI Bank, and definitely what he is asking, that is it better over HDFC? Definitely ICICI is better over HDFC Bank. HDFC Bank has its own set of problems and consistent selling by FI, which has not been the case with the ICICI. So my sense, there is a better prospect for making money by investing in ICICI.
Okay, all right. The next one that we have is also on a banking name. Canara Bank is what Arvind Maheshwari wants to know about. He's bought 2,000 shares at the levels of 161. He wants to know from a 2-year perspective whether he can continue to hold this counter or not. Saurabh, your view? He's sitting on a loss of around 55,000 rupees.
Yes, absolutely. You can stick with the Canara Bank. The valuations are good. The balance sheet is quite healthy, and above all, the bank is growing close to industry average, or maybe a bit above average of the industry. For the next 2 years, it looks a good bet.
Got it, Saurabh. But the next question coming in on Jyoti Labs, and Shahul from Bangalore, has bought shares at 420 stocks, almost half from those levels. Ajit, his question being if there's any chance of recovery and if he should average down, what would you recommend?
So average down, definitely not, because the way the stock recovered, roughly from around 195 to 270, it has surrendered all the gains in a similar manner. It means it's a vertical fall. And that too with very strong volume. So that clearly indicates that the recovery was used for further selling pressure or decline or exit from the investors. Now we have this base close to around 185, 87. So probably the downside means also seem capped. So adding to your loss-making position is definitely not recommended. And for remaining existing position also, your stop should be at 185 and use recovery towards, let's say, 225, 230 zone to exit your longs.
Okay, all right. It's time for a rapid-fire round. Saurabh as well as Ajit, you both know the drill. Vishnu is holding 1,200 shares of Sula Vineyards bought at the levels of 280. He says he's sitting on a huge loss. Wants to know whether he should continue to hold or book his losses. Saurabh?
Book your losses.
Peter has invested into PNG at 9,400. Saurabh's question being, should he hold for the next 1 year or switch to ITC?
Better hold, do not switch.
Okay, 1,250 shares of Ola bought at the levels of 85. Our viewer Sanjeet from Bhubaneswar wants to know as to what should be the next course of action. He can continue to hold this for a year. Ajit?
Hold with 34 as a strong base.
Got it. Well, the next one's on JK Lakshmi Cement. Ishwar is holding shares at 675. Saurabh, can you hold for the long term?
You can hold.
Techno Electric bought at the levels of 1,200. 100 shares is what Jawar Babu has bought. Can he average further, Ajit?
Consolidation is more likely. Avoid averaging. Hold with 900 as a stop.
Got it. The next question, that's coming in now, and this one's from Prashant from Bangalore. He wants a view on Hindustan Copper for the next 1 to 2 years. Would you recommend that, Ajit?
In fact, after this move, consolidation in a broader range is more likely. So at least reduce some position and wait for a dip towards 400 to re-enter.
Okay, the next one is on Bharat Dynamics. Our viewer Murli from Hyderabad is bought at the levels of 468. Wants to know if he can continue to hold this for another few years. Saurabh?
Poor operational performance, company struggling, better to avoid.
On Synoris Pharma, Saurabh, we've discussed a lot of pharma names with you today, but the stock's up almost 90% in the last 1 year, and our viewer wants to know if it's the right time to enter now for the next 2 years.
I think better to enter in a staggered manner.
Okay, Tata Elxsi.
Only correct.
Sure. Okay, Tata Elxsi, 100 shares bought at the levels of 4457. Continue to hold, purchase more, or sell? Vijay from Lucknow wants to know. Ajit?
Use recovery to reduce.
On Aster DM, Pradeep from Bangalore is holding 800 shares at 370. I think, Ajit, you mentioned the stock, but on the specific query at 370, is it still a good buy?
See, the stock at record highs, momentum is intact. Definitely hold with 740 now as a trailing stop.
Okay, John Cockrell, is this a good level to make an entry into, Ajit?
See, Mahima, I've not heard of this stock before. So can't comment.
No worries. Any view by any chance, Saurabh?
Very small company, better to avoid.
Yeah.
Preeti from Bangalore is holding on to Rajesh Expos, unfortunately, and we've had that extended coverage last week at 118. Saurabh, I think this might just hit lower circuits, but whenever she gets a chance, should she exit?
Definitely, she should exit.
Okay, E2E Networks, is this the right time to enter, Ajit?
E2E, we have seen a very sharp up move, Mahima. So let the stock stabilize, then probably one can look for fresh entry.
Okay.
Pradeep from Bangalore is holding on to Global Spirits, purchased at 851. Saurabh, should he still continue to hold for another year or book out?
Small company, you can book.
Shipping Corporation of India, can it be added now? Satyan wants to know, Ajit.
Look for dip towards 280 to enter fresh.
Nesco bought at 1,050 by our viewer Sumedha. She wants to know if can add more at this price or continue to hold her existing holdings. Saurabh?
Do not add more.
Okay, the next one that we have is from Ravi, who's writing us from Hyderabad. He's holding 100 shares of Marico at the levels of 853. Hold or sell, Saurabh?
Hold.
Next one's on Patanjali. Kavita from Australia is holding shares at 470 Ajit and asking a short-term view on the stock next 3 to 6 months.
Looks weak to me. Use recovery towards 440, 450 to exit your longs.
Got it. Well, that was the last question of the rapid fire in this edition of Ask Profit. Ajit as well as Saurabh, thanks so much for helping us solve 66 queries that we have in the last 1 hour. So a lot got covered today. So thanks so much for your views as well as inputs. But viewers, all the time in this edition of the show, thanks so much for watching. We'll see you at 2 p.m. for the rest of the queries at Ask Profit, the afternoon edition.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार अंबा शक्ति SDTMT.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal, and we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. Okay. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. How are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your...
Hello and welcome to KYC. I'm Sharad Dubey and you are watching NDTV Profit. This is the show where we get you a lot of stories which have been at times lost. At times there are new stories and at times a story repeats again and again. Interesting companies, but today also I've got an interesting company. We have earlier featured this company in KYC also, but try to guess this company. This was established in the year 2004 in Mumbai. The company is a CPaaS company. An interesting name, and remember there's just a handful of them in India. Of course the industry is not in favor right now on the Dalal Street. The company is now a part of Belgium-based Proximus Group as well. There seems to be a change of ownership in terms of promoters as well. But interestingly, the stock is up 26% from March lows. Let's discuss which company we are talking about. And when I speak about the CPaaS companies, and if it's from Mumbai, you must have guessed it by now. The company in focus is Route Mobile. But more than pros, there are a lot of cons in this stock. But why is it like that? Because the company's numbers came out in the fourth quarter, largely were mixed. But the industry wants to know what's the pressure on the industry specific front, at least on the company. We'll understand what's the guidance and the outlook going ahead for FY27. But question remains is AI a threat for a CPaaS player, or is there a silver lining? How does it actually matter? Also, enterprise CPaaS, the budget cuts have been there amid the macro tightening. Now, will that impact the client confidence for this company or for the industry? And also, is there an overhang still there of phasing out low value businesses, or is it done right now? Because that has been a big overhang in the stock for the last 18 to 24 months. A very limited success in scaling up of new products, and what are the timelines for it? Will they pick up? Because if they don't pick up, there might be another overhang in the stock. What kind of cross-selling synergies can some expect from Proximus Group? Because now they have a larger, much bigger group. So we'll try to understand that. And of course, the cash balance, that's where we see there is a good cash balance and the stock hasn't performed. So is there any reward for the shareholders, or is there any merger acquisition at play? That's the big question to be asked when it comes to Route Mobile. After a really long time, we have got this company. We'll try to understand the problems and what does the company talk about. Joining us would be Tushar Agnihotri, CEO at Route Mobile, where he'll answer all our queries. But let's try to understand what the company does. I'm sure you know a little bit by now about this company in the CPaaS space, but what is the actual story behind it? I'll get you that. It's established in the year 2004 in Mumbai. The company is a CPaaS player. Remember, this industry last 4 to 5 years ago, this was at its peak, but then, there was a lot of pricing erosion, especially in the low volume businesses. The company has cloud communication service as a platform provider. Also, looking at their key details, they cater to which persons? Enterprise clients they have, OTT players, and also mobile network operators. Apart from this, what's the portfolio? This includes solutions in messaging, voice, email, SMS filtering, analytics, and monetization. And that is where we try to understand, is there any favorable acquisition at play or not? This is the key detail about the company. But as we go deeper into it, now they have a global presence, of course, in Asia Pacific, Middle East, Africa, Europe, and Americas. And now the promoter is himself, there has been a change. And now it's a part of Proximus Group. Now they are a provider of digital services and communication solutions, but the street is wanting by when the synergies start coming in. That is where the big question lies. The Proximus Global, the company I'm talking about, they operate in Belgium and also in other international markets as well. So we'll try to understand what's the core philosophy of it, and they're owning Apart from Route Mobile, they have Telesign and BICS as well. So is there any, you could say synergy at play? That's the big question to be asked. Over 5 billion people worldwide reach if you combine that for Proximus Global, and they've secured almost 180 billion transactions annually, connecting more than 1,000 plus destinations. So we'll try to understand whether the industry has commoditized or is there any specialty at play. How's the revenue contribution looking like? Of course, from Asia and America, that's where you could see one of the bulk of the numbers are coming in, and the way they are putting things out is almost the same. Largely, you could say 73% revenue coming from just these two categories. Apart from this, let's look at the client account by size, how things have moved. Largely, they have a lower number of clients which are just near that $1 million to $5 billion. That's where they're having the majority of the clients. Interestingly, the concentration risk is not so much as what I had seen earlier when I had analyzed Route Mobile. $15 million plus clients, 5 of them are there, and $10 million plus, roughly 8 of them are there. What may work for the company? And if you are bullish on the company, I have listed down some reasons. Do note it down. There's a depressed CPaaS industry valuation. Everybody has written it off. Bullishness is coming from the analyst community. Only 5 analysts are tracking the stock, but nevertheless, all of them have a buy rating. And if any AI related announcements come and a use case is something which is made to understand the stakeholders, then maybe there might be more interest in the stock. Also, the merger acquisition hunt remains a top priority. Remember, they are having a decent cash balance. But what may not work for the company, that's where my concern comes in. There is a low margin business which is on a structural decline. Enterprises are migrating to OTT. That's one of the key concerns raised by the broking houses. Industry wide also, there's a cleanup happening of the A2P, SMS volumes, and largely things are moving from there. Enterprise CPaaS, the budget cuts are there, especially amidst macro tightening, and that's what we are seeing. So second, third order impact is happening to the industry. The limited success is there in the scaling up of new products. Largely, this is company specific. Only 8% of revenues contribution has come in. So we need to understand what's the timeline looking like for this work, and post-acquisition integration challenges are still there. So a lot of factors which have been putting pressure over the last almost 1.5 to 2 years for Route Mobile, and these are the factors which may not work for the company going ahead. But let's try to understand the KYC ratings, and let's see what has the company done over a period of last 5 odd years. We have tried to take most of the data, and the company has the data. So I'm going to give you the entire picture and the report card. Of course, this includes the income statement, balance sheet, cash flow, holy grail of financial numbers, and also the return ratios. Have they changed over the last 5 years? We'll try to understand the shareholding, because of course there has been a change happening. The street cred, has the stock actually made money? And of course the valuations, we'll try to compare that with Tanla Platforms, which is its closest peer, and the outlook also. We'll try to understand what the numbers is the company stating for FY27. Let's talk about income statement. I had mentioned earlier about the mixed operating numbers which had come in the fourth quarter, but the 3-year CAGR numbers are also quite dismal. Revenue, EBITDA, look at that. These numbers are in single-digit growth numbers. That means there is pressure in the industry. Is there a pricing erosion, or is there a commoditization? Because the numbers are saying the story. And also, if you look at the Q4 numbers also, the top line wasn't shown that much of a growth. Of course, some one-offs were there, where you're seeing the PAT numbers going up. But you need to understand and see the whole picture as a whole. Let's pull out the margins also, how things are maintained. Largely, this has been quite stable, so no complaint over here. Complaint definitely is there over the last 3 years, how things have happened to the stock itself. And of course, the management did speak in their presentations also about the pressure in the industry. So nothing moving much when it comes to the income statement. So it's a thumbs down when it comes to the overall income statement. Let's talk about the balance sheet. It's pretty decent, and I mentioned about it. It's largely a debt-free company. And remember, the promoter stake change has also happened. And look at this number, around 1389 crore rupees worth of cash is there. Largely for a cash-rich company like this, there would be some announcements, maybe like a buyback or some kind of a reward to the shareholders. But that's what we are waiting for from the management. And of course, in case any acquisition happens, by when the integration happens. So right now it's decently placed, so I'm going to give this a neutral rating when it comes to the balance sheet. So we spoke about the income statement, we spoke about the balance sheet. Let's talk about the cash flow and show you how things are moving and is there anything to watch here. Largely we see the cash flow from operations have been decent from FY25. If you just compare these numbers, the conversion has been pretty strong and the net total amount, that's around 32 odd crore rupees. Remember, a lot of restructuring, acquisitions has also taken place, so adjustments are there. So to keep things in perspective in a neutral manner, I'm going to give this a neutral as well for cash flows. But my concern starts coming in when we speak about the return ratios. Look at the ROC numbers. In FY22, it was almost 23, it was 22%. Before that, it had even touched 30 odd percent 3-4 years ago. But after that, the pressure started coming in from 18, 17, and this is where a little bit of concern starts coming in. But nevertheless, it is not that bad also. Largely for a CPaaS company, having a 15% plus ROC numbers is decent. So let's keep it, both sides equal in our analysis and give this a neutral rating. Let's talk about the shareholders and see what's happening here. There is, of course, you can see a change in the shareholding pattern coming from the 58%. Now it has moved to 75%. But my concern comes is the participation of the FIs and DIs. 16%, 6%. Now that itself starts coming down and now this comes at just 2%. A lot of movement happening when it comes to the public investors, and DIs also have reduced their stake. So a little bit of concern comes in. So this nullifies my analysis. So I'm going to give this a neutral rating. Let's talk about the stocks as a street cred, and this is where I think a lot of views coming in from our viewers who watch KYC, especially the long-term investors came to me. From March lows, everything went up. So let's just have a look at this. From 2025 highs, the stock is down 52%. In just 1 year, the stock is down 49%. And from the past 5 years, that is where we see the stock is down 70%. So concern definitely comes in. So I'm going to give this a thumbs down as well. Let's talk about valuations, what has happened. 5-year average valuation for Route Mobile is at 20 times. For Tanla, it is 18 times. Now that's almost halved, almost 9 times for the current P and 12 times only for Tanla platform. That means there has been a big de-rating for this entire industry. And whether this is quite cheap right now or not, that's where a big question mark comes. So I'm not going to give this stating that the valuations are very attractive, but yes, they have corrected massively from the peak levels or even the average numbers if I talk about it. So it's a neutral rating when it comes to the overall valuations front. Outlook, FY27 revenue growth, they have given mid to high single digit. Fair enough, decent. EBITDA margin is around 12%, which is there from the long-term average. There's nothing great in terms of guidance they have given. At least 80% of the total 5 analysts are having a buy rating. Because it's quite cheap and a big correction has happened, now they are deepening enterprise partnerships and expanding into new geographies. Question is by when it will start happening. Leveraging AI-driven conversations. Is AI their friend or their foe? Markets are still confused. And of course, apart from this outlook, they have tried to understand how things move ahead from here. So right now it's still showing, there are some questions, there are some clarity. So I'm going to give this a neutral rating when it comes to the outlook. Let's understand the KYC ratings for this company, and that's where a little bit of concern comes in. And of course, we'll have the management to give us the entire picture. Income statement, the company needs to show the numbers, and that is how things will move ahead if it has to. Balance sheet, cash flow, return ratios has been largely neutral in my analysis. And of course, if you look at it, street cred has been a big pain. Shareholding valuation, have kept it neutral, and so has the outlook been there. So the total KYC rating for my analysis for Route Mobile comes on the lower side of the average numbers we generally give. It is just 3 out of 8 for Route Mobile. But try to understand, the company has suffered a lot of pain, and try to understand what happens next. And for that, we'll be joined in by Tushar Agnihotri. He has over 16 years of experience in the telecom sector, held leadership positions in Tata Teleservices, Reliance Jio Infocom, and also other important companies such as Arvind Mills and Kotak India. So Tushar would be there in just a moment, and he will explain us, what's the road ahead for Route Mobile and are the pressures of the industry over or not. So stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal. And we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be a chair.
Welcome back to KYC, and we are joined in by Tushar Agnihotri, the Chief Executive Officer for Route Mobile. Good afternoon, Tushar. It's always a pleasure to have you at NDTV Profit. Tushar, I was just looking at the Q4 numbers. Of course, last 18-24 months has been a bit difficult for the company. But now let's understand what has changed. What's the outlook looking like for FY27, and also the industry specific, a little bit of overhang was there, especially on the low value business, which your strategy is to reduce it. What is the timeline looking like?
Good afternoon, Sharath. Thank you for having me. Sharath, the outlook for FY27 is a mid to high single-digit growth on the revenue. We're expecting roughly an exit at 12% EBITDA. Yes, I mean they are headwinds. We've spoken about that earlier, but we seem to be at the fag end of those headwinds. The new product revenue is sticking in. We see some decent growth over there, and of course, with the acquisition of Proximus Global, we have some interesting offerings which we're bringing to the Indian market, and we're fairly hopeful that they will create new revenue streams for us. These are interesting solutions. These are something which is not experienced by the Indian market before, and we're fairly hopeful that with the adoption of those solutions, we'll see a fresh energy in our numbers in our bottom lines. As far as the certain low-hanging businesses, I mean, we even are hopeful of some good opportunities coming our ways, and revenues will be on an upswing with them as well.
Right, Tushar, that means like the worst seems over. But I just want to understand a little bit of industry perspective also. The entire CPaaS budget cuts is something which, the brokerages also flagged off because there's a macro tightening also at play. How do you see this happening in the industry right now? You're just having a chat with your clients. What do you think over here?
I don't think, Sharad, there's a budget cut happening. Budget reallocation is happening, perhaps, where other channels are being adopted. Any progressive company, customer-facing company, would like to adopt new technologies, and perhaps the shift is happening from SMS towards other OTT channels. Now we're fairly equipped over there. We are working with all those OTTs. And we bring in those solutions with our value-added intelligence layer to them. And we're fairly hopeful that we will get a fairly decent pie of that business as well, which will keep us in a fairly strong position, or not only in terms of what kind of value we'll bring to them, and also in terms of the revenues we create and key for Route Mobile.
Right, and Tushar, what are the AI use cases happening for a CPaaS player? Because at times we think that larger AI players might put in more pressure on SaaS and CPaaS. On the other hand, you become a system integrator, it becomes more beneficial for you. So how is this AI playing out? And if you can quantify it, by when we can start seeing the benefits of Route Mobile coming in the AI space?
Okay, so let me just give you some brief on exactly how AI is impacting CPaaS. One, it's fairly in a fairly progressive manner, in a manner that we can bring better solutions to the enterprises. AI has layered CPaaS with some intelligence. Earlier, if you look at CPaaS, it was used as pipes to send comms to the end users of any brand. Now, with this coming in, you see there's some interesting use cases coming up. If I have to give you some insights, you can now hyper personalize your comms to the end user. So any brand, while targeting, can identify which channel. I spoke about multiple channels which are coming in play now. Which channel which evinces the right reaction from the end user. What time of the day do I need to send a comm to ensure that I get a favorable response from the end user? You can do sentiment analysis. You can look for if a certain statement is made either over a voice interaction or even over a text interaction. You can identify exactly where the user is heading. If you see that the user is kind of losing interest.
Tushar, that's a pretty interesting take on that. But I wanted to understand, from the shareholder perspective, any kind of, cross-selling synergies with the Proximus Group is something we can have, because you have globally a lot of other companies also in your portfolio. So is there any chance of cross-selling or a synergy?
So our group company, Telesign, has very interesting intelligence and fraud prevention offerings. Now, we are, of course, packaging in the way that we can address the relevant markets. There's something very interesting we're working on, which will bring some degree of benefits to not only banking, but many other sectors. So we were hopeful of going live with them very soon. This will bring in, as I mentioned earlier, bring in new revenues to us. This is something which is acutely required for the banking and the domestic other domestic verticals. I am fairly sure that that is something which enterprise will relate with. They will address some pain areas of these enterprises, and in turn, of course, bring value to us.
Tushar, one more question is on the cash balance. I'm of course a company of your size. There is a decent cash balance also. Is there any way to reward shareholders? Because of course the stock hasn't done much over the last 3 to 4 years, but any reward for the shareholders, or are you keeping that money for some kind of an merger acquisition?
So the approach is both ways. Of course, we plan to reward our shareholders by giving out higher dividends this year. We're targeting 16.5 as compared to what we were doing of roughly 11 year on year. So that's one target. And of course, we'll have to ensure that we keep delivering what we have promised to the market, promised to the stakeholders. That's one, of course. Alongside, we're looking at we have some targets. We're working on some acquisition possibilities, which will enhance our offerings of our platform, and in turn keep building value for our shareholders and stakeholders.
Thanks a lot, Tushar, for your views on the company, and it's good that you have cleared a lot of doubts which were there from the stakeholders, and that's what we get managements like yours to clear that in KYC. It's always a pleasure to have you, Tushar, with us, and best of luck for the future. May you get all your guidances for the future. So that's the interesting take coming in from the management of Route Mobile. Of course, there was a pressure in the industry, but now it seems like the management stating that the worst is over. But yes, we need to understand how the progress actually maps up going ahead as well. For interesting stories like this, stay tuned to NDTV Profit, and yes, keep watching KYC.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal, and we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact.
A spike in global risk aversion really drags the markets lower today. The Wall Street spooked by escalating Middle East tensions, higher crude prices and continued foreign outflows and are affecting the market. Now, metals, auto and real estate stocks led the decline today, while pharma and FMCG show resilience in trade. IT tracks weak global tech sentiment after a sharp sell-off on Wall Street. Wipro is amongst the biggest losers, while heavyweights TCS and Infosys trade firmly in the red. Oil prices surged with Brent back above $97 a barrel. War premium returns to the barrels as fresh exchanges of fire between Iran and Israel threaten to unravel a fragile ceasefire. Gold loses its shine as fresh Israel strikes on Iran rattled a fragile market. Ceasefire while tensions in the Middle East also are flaring again. Investors appear cautious with bullion extending the losses despite the growing geopolitical uncertainty. Quick commerce platform Zepto is set to file an updated draft red herring prospectus or DRHP for IPO early with SEBI this week. Now, the updated filing will pave the way for investor roadshows and move the company closer to a July stock market debut. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar and let's take you through the market action at noon today. And yes, there is weakness because of combination of a lot of factors really working against. A large part of it has to do with the global cues being weak. And that's what is really being mirrored by the Indian markets as well. So take a look at Sensex, Nifty 0.7% down in trade when it comes to the benchmark indices. If you really take a look at the internals, barring two important sectors with minor gains like FMCG as well as pharma, the rest of all the sectors are in the red. So there is a broad-based sell-off as well as weakness that is being seen. When we take a look at the broader markets, it's 0.5% down when it comes to the mid-cap index as well. So slight outperformance compared to the key indices, but still not something to really talk about. When we talk about the banking sector, yes, that's also seeing a 0.6% decline in trade. So that's what the market picture is really looking like. And remember that it's also the crude oil prices because of the global war uncertainty is really impacting the Indian markets. Rupee also has to be kept in mind despite all the measures being taken, but uncertain environment and FII outflows put pressure on rupee as well. All right, let's move on then. While replying to NDTV Profit's query on Rajesh exports, remember market regulator SEBI chief Tuhin Kanta Pandey said that the order is in place and law will really take its course on this particular matter on easing of bond market transactions. Also, Tuhin Kanta Pandey said that SEBI and RBI are working together to introduce derivatives on corporate bond indices. Listen in.
Has SEBI made a mistake with Rajesh exports? Is what he's claiming. He's claiming that everywhere that SEBI has made a mistake with the numbers when it comes to Rajesh Mehta.
See, as a matter of principle, on individual cases, we don't really comment on the media. Actually, this is a quasi-judicial process in which orders are issued and they have to be accordingly complied with or gone through in a manner which has been provided as per the law. So there will be no comments from my side.
So anything further on the tokenization that you announced last time that the pilot is happening for the bond market? Any progress on that? When can we see new regulations for the bond stockbrokers as well as the tokenization program?
I think I had at that time indicated that tokenization pilot will take 6 to 9 months. I think that was about a week or 10 days. So I think you have to wait for this.
All right, so that is the SEBI chairman speaking exclusively to NDTV Profit and also giving direction on the Rajesh export scam case. All right, let's get chatting on the market momentum today. And we have with us Anuj Jain, who's the Chief Investment Officer and co-founder at Green Portfolio PMS, and Anil Rego, the founder and fund manager at Right Horizons PMS. Gentlemen, so good to have you on NDTV Profit. Anil Rego, first of all, in terms of the market, with the many pressure points that the market is dealing with, despite many concerted efforts by government as well as RBI, there is weakness, and we are almost only 1,000 points away from 52-week lows when it comes to Nifty 50. What will be your sense on the near-term view on the market momentum?
Yes, so definitely I think there are a whole lot of things which are happening globally. Okay, right from the technology side and the impact on the AI stocks triggered by poor results of Broadcom. Then you have, let's say, the US-Iran war again looks like coming up. Okay, so on top of that, you have interest rates also, global interest rates also picking up, especially in the US. So you have various factors which is sort of triggering it on a global scale. And it's definitely, in a situation like this, even with various measures of the Indian government, right, there will be an overhang thanks to global cues. In terms of the short term, honestly, we believe that, we've seen a good part of the downturn and the downside already there. And our expectation is hopefully we don't go below that, 1,000 points down from here. Okay, and I mean, our view was that we should expect a bottom somewhere, June 0.
Right. So, Anil Rego, of course, lots of action and lots of aspects to really watch out for. Anuj Jain, in a difficult environment like this, where a lot of good companies would also, as part of the overall market momentum, also lose their valuations, while some of the sectors, like we have seen in the case of consumption or defense, or else in the case of green energy, where the momentum has built up in the new environment. How would you identify the critical stocks and spaces that still holds value for a near to medium term?
Yeah, hi Nisha. So basically, like Anil said, the market is not, to be very honest, I don't think there is any direction in the market right now. But that doesn't mean that there will be not stock specific or industry specific actions. I believe there will be a lot of actions, industry and stock specific. The government budget, if you see, the allocation to the infra sector has risen sharply. So basically, anything related to infra and defense, we have seen Make in India is a major thrust area for the government. The spending has increased. And if you see between the lines as to how the Make in India is being implemented, so just to give you an example, there is a defense company. I would like to avoid naming any company here in the show. So, but there is a defense company which I know about, and this company was armed to state in accepting an order that they did not have capacity. They were asked, you have to build a capacity, you have to deliver because we want it to be made in India. So this is the kind of commitment that the government has shown as far as Make in India is concerned. So basically, these are the areas there will be action going forward in near term to long term future. So basically, there will be a lot of pockets where still money will be made. And I again agree with Anil that market might not see a sharp fall from here because whatever bad had to happen, that has already taken place. So this is my view. Yes, Nisha.
All right, Anuj, so great call there. Anil Rego, how much cash would you ascertain to be kept for safe investors, for larger portfolio of investors who are looking for their hard-earned savings to be put to use? So mostly long-term investment category, investors. How would you really suggest the strategy in terms of how much cash should be ascertained, hoping that probably the market will see volatility and downward downward pressure going forward for some more time?
It needs to go back to what is the risk profile, right? And that should drive, what is your allocation, or in fact, what is your allocation to equity itself, rather than, taking cash calls here. Now, let's assume that within, the equity portion, you want to be tactical in terms of your approach. Then in that case, I would rather be almost invested by July. And so, in a phased manner on every dip, one can end up, adding is what our view is. Being cautious is something that we would like to be when markets are at a, peak and, done really well, etc. But I think right now, we believe the risk is on the upside. So I would not hold too much of cash at this point of time.
All right. And what about you, Anuj? What are you looking at in terms of playing with the market momentum as per the next cycle of earnings, where the full impact of the war situation and the kind of inflationary pressures that we have seen will probably show up in many sectors? How are you differentiating between the sectors, and what could be the investment strategy there?
So, Nisha, I think the market has already factored in that quarter one will not be that good because of the geopolitical crude oil prices and a lot of shipping issues. So that is already factored in somehow. So basically, what I believe market is waiting for is a positive cue, and that could come from many directions. So one could be trade deal with the US and the implementation of trade deal with the EU. These are the very two big events that we are waiting for and hoping for will translate in this calendar year. And FII coming back once you have a trade deal with the US, because the sentiment toward Indian market will change drastically from there on. So basically downside, I don't see much, but upside could be very sharp and very fast. Suppose these events actually transpire and there is no negative major event, not a short event. There is no major negative event, for example, a new war or something like that in the future. Then I am expecting limited downside, but upside potential as immense.
All right, Anuj as well as Anil, thank you so much for your perspective and strategy in the market at a time when there is volatility as well as uncertainty and a lot to do with the global cues coming in. All right, a lot has been done also on the economy front, the macro front, as well as the rupee in terms of arresting its fall. Gaura Sengupta, the chief economist at IDFC First Bank, joins in now with her take on this particular matter. Gaura, always a pleasure speaking to you on NDTV Profit. With a few important events when we talk about the macro events, RBI's announcements, government's keenness in increasing the flow of foreign inflows, especially in the bond market, to strengthen that part for really pushing in our growth agenda. On the other hand, RBI's stance as well as direction when it comes to inflation, growth, as well as interest rate trajectory, and the kind of rupee movement now that we are seeing with the global cues coming in. How would you encapsulate all of that and give a short-term view on the macro economy as well as the outlook?
I think it was a very, very good policy. They did what was required. So the near-term challenge that we were facing was the capital flows, and they have done whatever was required. So for example, it is a broad-based change. You have FCNRB, you have ECB, even for FPI investment, government bonds. So it's across instrument, and for FCNRB, the RBI will be taking the entire hedge cost. For ECB, it will be subsidized for PSUs. So the quantum of capital inflows that these measures can generate, we're still waiting for the fine print, but it looks like that we could get chunky flows of around maybe $50 billion in FY27. And the tax changes that the government of India has done, where they have removed the taxes for FPIs on GSEC, whether it's withholding tax or capital gain tax, that could also smoothen the way for India to get included in the global Bloomberg Global Aggregate Index. But the flows for that will come if we get included, will come in FY28. But in FY27, the FCNRB followed by the ECB measures are expected to generate $50 billion. What this does is it reduces the pressure on the currency. It gets the balance of payment, which has been in focus for the last couple of months. From a large deficit, it can get the balance of payments to, I would say, a neutral level. So it caps the depreciation pressure on the INR, gives monetary policy the independence to focus on domestic conditions. So, for example, our interest rate call is that RBI is likely to stay on pause because while there is upside risk to inflation, there is also downside risk to growth, and which RBI also very clearly highlighted with their downward revision to GDP to 6.6, as well as upward revision to inflation to 5.2% levels. So we expect that since this is a supply side shock from a monetary policy perspective, the first response should be to stay on pause and to look at the impact. And for now, this capital inflow scheme gets that space to stay on pause.
Right. So, Gaura, a very important point there that RBI is expected to pause on any interest rate changes in the near term because it's a supply chain aspect. But, Gaura, the short-term measures, there are short-term measures and there are long-term measures in what the Reserve Bank of India and as well as the government, they have planned to do. Now, in case of short-term measures, which are absolutely the immediate requirement for us in case of the rupee being stabilized, where is it lacking? What are the aspects and the announcements which can impact strengthening rupee in the near term? Because today also it's under tremendous pressure.
So the market reaction will come once the flows come in. So market, for example, you will see the reaction in the currency when the flows come in. But just to set expectations, though we are saying it's going to be a very large $50 billion inflow that comes in FY27, it will just balance the BOP. So we don't expect very sharp appreciation moves in the currency because when the dollars will come in, RBI will absorb the dollars and add to FX reserves. And you will see that because the RBI will do buy-sell swaps when it comes to FCNRB. They'll be doing that also for the ECB inflow. So they'll absorb the dollar inflow. They will also use this as an opportunity to reduce allow the near-term swaps on its forward book, which is around maybe $40 to $50 billion up to 1 year, to mature it, so to ensure that the forward book maturities are elongated. So net in terms of the rupee movement, it will cap the depreciation pressure. You could see maybe some short-term appreciation when the flows start coming in. So we know once the flows start coming in, you will then see some market reaction. But overall, it will just smoothen the USD INR path.
All right, Gaura, thanks so much for putting all that into perspective. Thank you so much for joining in. And of course, rupee movement will be closely watched because on the sentimental ground, on the RBI policy day, rupee did recover a large part of it, but today under tremendous pressure as well. Also, take a look at oil prices. They have been at elevated levels. All the softness has gone because of the uncertainties really cropping up. Let's get chatting about geopolitics, which is playing truant with the crude oil prices and on the other hand, our rupee as well as equities markets. James M. Dorsey, who's S. Rajaratnam School of International Studies, joins in. James, always a pleasure to welcome you on NDTV Profit. What do you make of the recent, backlash, again intensifying of war when it comes to Israel getting more aggressive and the pressure on US president to really end the war, but still the war of words really continue. Putting all that into perspective, it doesn't look, the crude prices don't show that there is any sign of the negotiations happening at the current moment, or at least the uncertainties of war going away. What's your view?
The ball essentially at this point is in President Trump's court. It's clear that he, on the one hand, is very unhappy with the way Israeli Prime Minister Netanyahu is conducting affairs. But on the other hand, I think you have a situation in which the Iranian attack and the Iranian response is not only simply that it wants to ensure that there are no attacks on Beirut and that Lebanon is part of any deal that is concluded between the United States and Iran. It's also that Iran is getting frustrated, in some ways much like Trump, with the slow grinding process of the US-Iranian negotiations. And this is one way of breaking the mold. It puts Trump in a bind. On the one hand, he's being seen as not being able to rein in Israeli Prime Minister Netanyahu. And that, in fact, is one of the, if you wish, litmus tests for the Iranians. They want to see that the United States can control Israel, not something that they've demonstrated until now. And on the other hand, of course, if he does not intervene and he lets things escalate, then he runs the risk of the United States being dragged back into a war it wants to get out of.
Right, so James, at the current moment, the way the turn of events have really taken place, do you foresee more escalation to the war, and what are the main factors that are on your radar for that?
I think that we're going to see for the next few days increased tension. Things are moving very rapidly. We've already had 3 strikes. At this point, in terms of the tit for tat between Israel and Iran, the ball is really in the Israeli court. So you've had an initial attack on Israel by Iran in response to Israel targeting a building in Beirut. Then you had the Israeli response to that, and you've now, in the last 2 hours, had a second Iranian attack to which Iran has yet to respond. A complicating factor in this is the fact that we've also seen a missile attack by Yemen's Houthi rebels on Israel. And the question is whether this is just a sign of symbolic solidarity of the Houthis with Yemen, or if indeed they are going to join the fray, which would inevitably mean that we're not only going to have disruption of shipping traffic in the Strait of Hormuz, but also in Bab al-Mandab, which is the waterway that links the Suez Canal with the Arabian Sea and the Indian Ocean.
That's right, James. In fact, Strait of Hormuz very, very critical for the global flow of oil as well. But James, finally, what are the factors on your radar to see a turn of events, probably in a positive direction? How pressured will be the US President Donald Trump to end this particular war? Also, their midterm elections are nearing. There is pressure from the House to end the war. How do you see this situation and role of China all put together?
Okay, I think, first of all, what I'm going to be looking at is obviously how Israel responds to the tit for tat and how President Trump responds to this whole escalation of events. I think one of the problems in the Trump strategy is that he's only willing to rein in Israel if he has a deal already concluded or at least agreed upon with Iran. On the other hand, Iran wants him to demonstrate that he can control Israel before he concludes a deal. So it's a catch-22 that Trump has to resolve, while not being seen to be caving in either to Israeli demands or, yes, for that matter, to Iranian demands.
Right. All right, James Dorsey, always a pleasure getting your perspective on the global situation. Thank you so much for joining us right here on NDTV Profit. All right, not losing sight of the markets, Shivam is standing by with all the stocks that you need to have on your radar today because of news developments. Shivam, what's on your list today?
The first stock in our list today is the EMS stock. The company the stock has been seeing a strong momentum as the company has received a construction order which is worth rupees 103 crores from UP Jal Nigam. The company will lay and join sewer network and provide sewer house connections, and the time period for the execution of this project is kept at 24 months. Next stock in our list is the Stallion Indian Fluorochemicals, which is seeing some downward pressure as the Neomal Corporate Advisory has sold around 2.5% stake, and prior to this stake sale, the company hold around 12.39% stake, and which is reduced to 9.86%. Third stock is HG Infra, which has received a completion certificate of an APC project, which is worth around 4,971 crores. Now, this project involved the Meerut-Prayagraj Ganga Expressway, which involves 152 kilometer stretch, and the project has been declared fit for commencement of commercial operations. Now, fourth stock is Z Entertainment. The company has scheduled a board meeting to mule a fundraise, and this fundraising will be done via equity share or convertible securities. And last stock is the DE Development Engineers. The order book of the company has crossed the 2400 crore mark, and which was mainly supported by the strong order inflows of around 631 crore during this month, and the strong order inflow growth was mainly led by piping and heavy fabrication segments.
All right, Shivam, thanks so much for giving us the entire account of the stocks on the list. With that, it's a wrap on Markets at 12. Keep it with NDTV Profit. Thank you so much.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal. And we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. How are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner we dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be sharing with you of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected in while.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and I've Sharad Dubey, who's standing at the NDTV Profit market pit with all the action. Sharad, good afternoon. Interesting day of trade. I mean, you're seeing the pressure, though. I mean, in terms of Bank Nifty as well, that mild recovery from the day's lowest levels. Likewise, if you see in terms of the broader markets as well, cuts are not as deep, and you saw that rebound come in terms of Asian markets as well. I think the downer right now is Brent, which is again breached $97 to the barrel mark on the upside.
Well, yes, good afternoon, Hiral. And yes, it's a very, very slow recovery which we are seeing in the markets for both benchmark indices, Nifty and Nifty Bank. There was a big gap down opening, and after that, we are seeing a minor recovery coming in. But nevertheless, if you look at it from the day's low, or at least from the starting, from the opening itself, the recovery is there. One recovery attempt was made in Nifty Bank. A little bit of correction, but now again it's picking up. So hopefully, let's see what happens here. Some kind of short covering is possible here. But yes, good levels of support is being defended, and I'll get you those range also. Let's pull out the key factors, what should be watching out for in the day's trade. Of course, a little bit of big overreaction was there. But the Nifty support range is that 22,900 to 23,100. That is where the bounce has come in, and it is sustaining. Nifty Bank also, the range is between 53,600 to 54,000. That's where the key support range is looking like for the markets. And the Nifty Bank's technical setup is slightly better, as we had told earlier in the day as well. It's better than Nifty. Apart from this, also looking at the sectors, defensives like the healthcare and the pharma sector are seeing buying, and in a day of red, these two are the segments which are in the green, and a good volume-based buying is happening. Small caps are seeing a bigger sell-off, compare that with the large caps as well, so that's not helping the overall market breadth. Apart from this, the rupee has seen a strong reversal. What we saw on Friday is now reversing almost 70 paise on a weaker side. Global yields are remaining elevated. And the way the situation, the global development, the AI and the liquidity concerns is definitely spooking the street. But is it overreaction for the Indian indices? Maybe. So technically, we can see a little bit of slight recovery as well going ahead.
Okay, so that's with regards to where markets are concerned. But let's quickly take a look at what's on the watch list today. Pharma stocks, there is fresh buying that's coming in across pharma companies, and this follows through when you talk about hospitals as well. Indigo, they're eyeing capacity addition by FY30, and that's the reason why the stock is buzzing in trade, though there was pressure building up, and that's because your Brent is above $97 per barrel mark. Thangamel, that stock is trading at a 52-week high. In fact, in the previous shows as well, we've been talking to Kush Bora and Parag Thakkar, where they're saying that fundamentally and technically as well, the chart is looking very strong. Inox India, US order for a large E-size tanks is what they had indicated in their annual report. Now, reports are indicating that probably this could be with regards to where SpaceX goes. Wipro has touched a 3-year intraday low. That stock continues to trade under pressure for a second consecutive session. And you have, the West Bengal related stocks which are seeing some good momentum on the back of the capex push. Z Entertainment, that company is eyeing a fundraise. OMC is under pressure on the back of Brent above 97 per dollar mark. And your PSU banks are off your morning lows as well. So some recovery coming in there. Thomas Cook, Bombay Tying, Kiri Industries, all of these counters that are buzzing on the back of volumes. But Sharad, over to you to take the rapid fire with Nilesh Jain of Centrum Broking.
Thanks a lot, Hiral, for that. Good afternoon, Nilesh. It's always a pleasure to have you at NDTV Profit. We'll start a rapid fire segment. Nilesh, the first stock would be Thangamayil Jewelry. The stock hit its 52-week high levels. Do you think there is a good time to do a little bit of profit booking in this case, or there is more strength left in the charts?
Well, Sharad, it's both. In fact, there is strength, but you should consider booking profit as well, because we have already seen a very strong rally of 35% in this series itself. So, ideally one should start booking profit. But yes, gradually we can expect further momentum, maybe towards 5,900 to 6,000 in the near term.
Right, I'm giving you three stocks, Nilesh. Thomas Cook, Bombay Dyeing and Kiri Industries. All of these three stocks are buzzing on back of volumes. Out of these three stocks, any good trade to be made here?
Thomas Cook, Kiri Industries, both are clearly a pullback trade. We have seen a lot of correction in both the counters, and finally we are witnessing a strong rebound. But comparatively, Bombay Dyeing is showing more strength, so that can be a better option out of these three. So Bombay Dyeing looks positive for 140 kind of levels on the upside. So keeping a stop loss below 122, the risk and reward is also looking attractive. So Bombay Dyeing could be a better option out of all these three counters.
Right. So Bombay Dyeing is the top pick over here out of these three options. But Wipro, we wanted to get your views on Wipro as well. Of course, the entire IT space has been quite volatile. But is there anything there in Wipro for a trade?
Yes, there is a trade, but that should be on a short side. Given the kind of a breakdown that we have seen, the structure appears weak. In fact, not only Wipro, it's across all large cap ITs, the structure has turned negative. And it's kind of a double top pattern breakdown that we have seen in this counters today. So if it closes below 185, then we'll get a confirmation. Mostly in the coming sessions, it may head towards 180 to 175 on the lower side. So avoid taking any contrabet for the time being. And yes, on the pullback, one can go short.
Okay, a short on a pullback when it comes to Wipro, but PSU banks also, they seem to be coming out from their lows as well. Anything which is looking interesting amongst the PSU banking pack?
Well, absolutely. PSU banks, we have already seen a very good rebound in last couple of trading sessions. So within PSU banks, SBI looks slightly better placed given the kind of breakout where we have seen from its 200 long-term moving average in the previous week. So yes, this counter one can consider, and it has already at a corrected level. In last couple of months, we have seen a decent correction. So keeping a stop loss below 950, one can go long in SBI for upside target potential maybe towards 1020 to 1040.
Right, and BML, what stock would be that on this, BML, of course, the stock was a little bit in consolidation, but how does it feel when it comes to the technical levels?
See, technically it is still consolidation mode, but good part is that after a recent correction, it is at the lower end of the range, and it is taking support at its 50 and 100 moving average as well. So both the supports as of now is placed somewhere around 1700. So keeping that as a stop loss, yes, one can go long for a pullback phase towards 1800 to 1850.
Another stock is Z. I know for the last 1 to 2 odd weeks there has been a good volume being made, and now it's also hosting, interestingly, the FIFA World Cup, which is expected to start in the coming few days. I just wanted to understand, is there a good positional setup right now also?
Well, Sharad, see, there was a breakout from an inverse HNS pattern at 95, and we did recommend it to a client as well, and we have advised to book profit as well near about 105 to 110 range. But yes, the major juice is over. Yes, there could be possibility we may see another leg on the upside. But in terms of making a fresh entry, the risk and reward is not looking attractive. So avoid chasing the momentum as of now. Wait for some bit of a correction, maybe towards 105 to 100. That can be a good entry point. Yes, the setup has turned positive, but ideal entry range could be little at a lower price. Positionally, we expect this counter to move towards 125 to 130.
Right, and Nilesh, let's pull out the OMCs also. Is there any shorting chance for these OMC stocks? Of course, there's an impact of Brent Crude, which Hiral had pointed out earlier. But is there any kind of a trade to be made on the short side?
Well, absolutely. Given the kind of a rebound once again that we have seen in the Brent crude prices, if it breaks above $100 decisively, then yes, we are expecting Brent crude to move towards maybe 105 to 110. So, given this kind of a setup in OMC counters as well, we are witnessing a continuation of a selling pressure. Overall, HP, BP, IOC, all these three counters are looking weak. But yes, there is a trade in BPCL. If you get any pullback towards 292 to 294, that can be used as a selling opportunity, keeping a stop loss above 300 and downside target maybe somewhere around 280 to 275.
All right, important trades coming in the rapid fire segment. Over to you, Hiral. What are the stocks trending in the Google space?
Thank you so much for that, Sharad. In fact, again, two stocks which are very similar to what we saw in terms of Friday's session. Trent, IFCI, both of them have again made it to the trending stocks list in terms of Google. If we can just pull up that one on the screen. Trent seeing marginal cuts of around 0.2%, and if you can get me IFCI as well, that counter is down a little over 5%. Nilesh, anything on the charts with regards to both of these?
In fact, setup-wise, IFCI, the setup is looking weak because we have already seen a topping out formation, and looks like this momentum, what we are witnessing on the lower side, may extend further towards 72 to 70. So these are the levels can be seen in IFCI. And coming to a trend, recently we saw some bit of a pullback, but on multiple occasions, it could not surpass its 200-day long-term moving average that is right now placed at 2,880. So it is important that it should break that barrier. Then only we can expect, further momentum maybe towards 3,100 to 3,200. But as of now, it is moving sideways. There is no trade at current level. Trade can be initiated post breakout, and the stop loss will be somewhere around 2,700.
Yes, so that's with regards to where trend goes. The stock seeing marginal cuts of 0.2%. So that's what we are looking at in terms of individual names that are buzzing in trade. But the other space that we should be talking about is pharma. Hospital stocks are buzzing in trade. Pharma names are buzzing in trade as well. You're seeing fresh buying in hospital names. Now, the key reason over here is high domestic exposure. Your valuations have seen a correction as well. There is buying seen in defensives in pharma and, healthcare being a defensive pack. That's what you're seeing over there. And good volume built up. Q4 numbers extremely strong when you talk about names like Apollo and Fortis. And the idea that we're looking at over here is that a lot of funds are looking at hospitals as an investment opportunity right now, because what's happened is the start of the capex cycle that we saw in terms of hospitals over the last 12 to 24 months, that has started to actually convert into revenue recognition, and that's the reason why probably that interest that is coming back. Nilesh, in terms of hospital names, anything that you like on the charts?
Well, Hiral, you have pointed out two counters, that's Fortis and Apollo Hospital. In fact, technically as well, both the stocks are looking strong on the chart. Just to give you a disclaimer, Fortis we have already recommended to our client near about 985 to 990 level, but yes, the structure looks very strong for further upside towards 1,020 to 1,040 in the near term. So that's one particular counter that we are liking. And apart from that, Apollo Hospital on the back of fresh breakout that we have seen in today's trading session. And also if you see derivative data for all these counters also looking positive, we are witnessing a build up on the long side as well. So Apollo Hospital is also looking strong for 8,600, 8,700 kind of level on the upside, keeping a stop loss below 8,300. Yes, this counter can also be bought on declines. But apart from that, if you see Yatad Hospital or maybe laboratories companies like Laurus Lab, Lal Path Lab, in fact, all these particular counters are also looking better place.
Right. So pretty interesting take coming in on the hospitals front, but Bernstein has also come out with its report on this healthcare industry. And to decode that, we are joined in by Varsha. Varsha, what's in the note?
So basically, US tariff concerns are back, but what Bernstein is saying that the pharma is actually exempted when it comes to the tariff concerns, and hence Bernstein is, I would say, positive on the Indian pharma companies. Now what they are highlighting that generics and the biosimilars have been clearly kept out of the tariff framework, which protects the bulk of Indian exports. Now, they also point out that the exemption, including pricing and onshoring benefits, and hence within this space, Bernstein likes or prefer companies like Zydus and Lupin and Sun Pharma. Also, if you see, these players have a good manufacturing presence when it comes to US and hence are insulated from the tariffs concern, number one. And they've also added like the niche areas like orphan drugs and rare disease therapies, which remain exempt and hence which supports the pipeline of these companies like Zydus and Lupin. Lastly, overall, Bernstein remains positive on Indian pharma sector, considering they are well protected when it comes to US tariffs.
Thanks a lot, Varsha, for this. Even in this market, your sector is buzzing all sides. But I just wanted to understand, Nilesh, your Zydus, Lupin, Varsha was talking about Sun Pharma. Out of these three companies, which is looking good on the technical charts?
Well, Sharad, out of all these names, in fact, if you see Sun Pharma, this particular counter is looking better place, and also Zydus Life as well. Zydus Life, if you see, the counter has been trading in an uptrend since last couple of weeks and also showing some bit of a momentum. So further upside towards 1130, 1150, that cannot be ruled out in this particular counter. So one can keep a stop loss below 1060 and go long. Apart from that, Sun Pharma purely a pullback play because recently we have seen a decent correction. After counter has hit a high about 1900, the stock has corrected below 1800. So overall, it can be played for a pullback trade towards 1840, 1850, and stop loss should be placed at 1755.
So that's with regards to Sun Pharma as well. But moving on, Interglobe Aviation is eyeing strong moves in terms of FY27, and this is what they've indicated in their annual analyst meeting as well, or investor meeting, I would say. I have my colleague Danish who's with us to tell us more. Danish, what are the key highlights? Because I know the stock is down a little over 2%, but probably that's a reaction of the way crude prices are panning out.
Well, India's largest airline in terms of market share and fleet size, Indigo, aims to be a bigger airline by 2030. By 2030, the airline is also targeting to have over 3,000 daily departures and a fleet of over 550 aircraft. The airline is also targeting a 40% share in its international capacity. And in order to grow this international business, the airline is planning to focus more on long-haul network and increase the international to international traffic from India. As far as FY27 is concerned, the airline will be inducting 9 AC-21 XLR aircraft, which will enable the airline to fly to far-off places. Besides this, if we look at the overall capacity from FY27 onwards, the airline believes that as of now, it will be somewhere between low to mid-teens. But in the longer run, if we look at the airline's plans, then the airline is targeting to get back to a good growth rate of post 2028 onwards. Besides this, if we look at the old figures and the new figures, as far as premium seating is concerned, in the previous financial year, Indigo had 2,800 premium seats, but now by the end of March 31st, 2026, we are seeing that this capacity has increased to 4,300 seats. Besides this, the airline is also seeing a great demand for its business seats, which is also called the Indigo Stretch, and the aim is to expand it to 65 AC-21 aircraft and 40 XLR aircraft. Besides this, in order to grow further, the airline is also targeting to grow its cargo volumes by FY30. The target is to increase it by 1.5 to 2 times, and the cargo tonnage target has also been revised to upwards of 450,000 tons by FY30. Very lastly, the airline continues to induct new aircraft almost every week, and as of now, Indigo has over 901 aircraft that are yet to be delivered. And very lastly, the airline is also expecting to increase its own ownership of aircraft, that is somewhere between 30 to 40% by FY30 from the current 20%.
Okay, so that's with regards to Interglobe Aviation. Thank you so much for that, Nilesh. On the charts, what is Indigo looking like to you? Because there is pressure today, but yes, it's on the back of Brent.
Well, the pressure is likely to remain because the Brent crude, if you see, we are expecting further upside to continue in the near term. So given that kind of a setup in the Brent crude, and also if you see Indigo chart, today's closing will be very important. If it closes below 4400 mark, that will be considered as a negative close because 4400 is the strong support of its 21 as well as 50 DMA. So that's a very crucial level to watch out for on the closing basis. If it closes below the same, then the target on the lower side, maybe somewhere around 4200 to 4100 can be seen in the near term.
That's to where Interglobe Aviation goes. But moving on, SpaceX is gearing up for what could be the largest IPO in market history. And this is something which is actually trending and, on the internet as well. They're aiming to raise $75 billion. A valuation of $1.75 trillion is what you're looking at. Mahima is joining us to tell us more in terms of the key highlights and how Indians can actually get exposure to this one. Mahima, over to you.
Right, Hiral. So as you rightly mentioned, it's one of the, in fact, the biggest IPO that the market's history will ever see. And SpaceX is planning to raise around $75 billion at a valuation of $1.75 trillion. The price, of course, is set at $135 per share. And up to 30% of this IPO allotment is secured for retail investors, which is not a case in general. Generally, only 10% is reserved for retail investors, but for this IPO specifically, it's as high as 30%. So that's something that investors need to keep in mind. In terms of what does SpaceX do? Well, it has three segments. The first one being space, where around 650 total launches have happened till date. The second one is connectivity, where everybody knows Starlink, and 9,600 plus Starlink satellites are already there in orbit. In terms of where the overall subscriber goes, that's around 10.3 million subscribers as of March 26, and 164 countries plus in the coverage of Starlink. The third business is the AI business, which has been recently acquired in the form of X. So both X as well as Grok form part of the AI vertical. They have expanded via the acquisition in Feb 2026 of X. So these are the verticals of SpaceX. Now, in terms of where the financials go, this is where the real concern is, right? Because overall, if you take a look at how the net profit or net losses stand at as of 25, the total loss for all three businesses stood at $4.9 billion, and that is at $4.3 billion in Q1 2026, and all of the three verticals are right now into losses. So that's something that investors need to keep in mind before investing into this one. Plus, in terms of the long-term debt, that stands at over $29 billion. So that is also something that one needs to look at. Use of proceeds, well, they're aiming to raise funds for expansion of AI compute infrastructure, then launch infrastructure and vehicle enhancement, and as well as satellite constellation scale-up is something that they're looking at via raising these IPO funds. In terms of valuations, now this is at least beyond understanding for me, because if you take a look at SpaceX revenue, it is at $18.7 billion as of 2025 at a price to sales of 94 times versus that of Nvidia trading at 25 times at a revenue of $130 billion, and Apple at $400 billion of revenue at 8 times price to sales. Though this is not an apple-to-apple comparison, but still, these big companies at such high revenues are still not nowhere near the valuations at which SpaceX is coming with its IPO. In terms of where the recent amendment that happened in the NASDAQ rules is also very interesting to watch out for, because recently NASDAQ made changes for these big IPOs to kind of be included in NASDAQ 100. Earlier, the rule was that they have a gestation period of at least 3 months before they get included in NASDAQ 100. But now those rules have been kind of cooled off, and now even in 15 days, something like a SpaceX after getting listed can get into NASDAQ 100. Lastly, in terms of how Indians can be a part of this, well, firstly, if pre-IPO, if you are having an international broking account, then your broker can help you get pre-IPO shares. But the other aspect is that you cannot go ahead and subscribe to the IPO. But after listing, you can either go ahead and buy the share, or once it gets included in the NASDAQ 100, you can own it indirectly via NASDAQ index funds or ETFs. So this is the overall view. But at the end of the day, Hiral, the valuations, the losses at which the company sits at, something needs to be looked at.
Well, that's thanks a lot, Mahima, for that. But just to have an extension on this discussion, there is an Indian company also having a relation with SpaceX. Now, what is that? To get that entire perspective, we are joined in again by Varsha. Varsha, very interesting company you have. Which is that?
Inox India. So they have recently received an order from US based. That's what they've said, that they've received an order from a US based private space US based space company, and that order value is at around 200 crore. And they are also expecting more similar kind of orders in Q1 and Q2 of FY27. Lots of actually triggers working out for this company. I would say the revenue from cylinders, if you see, was around 150 crore, and they are expecting market share gains also. And they're also expecting robust domestic and export demand as well. Now onto the FY27 outlook, they're expecting 18 to 20% of revenue. Also, order inflow run rate is estimated at around 450 to 500 crore per quarter, and margins are expected to remain stable at around 21 to 24% band. So overall, this is the reason, because of the IPO coming in. This is the reason why Inox India is actually buzzing in trade.
That's a very interesting trivia, actually. Thanks a lot, Varsha, for that. Nilesh, just wanted to get your view on Inox Wind also. I mean, Inox India, the stock itself is up 5%, good volume momentum also coming in. Anything on the charts?
Well, Sharad, a very good setup. In fact, we have already seen a very strong breakout on Friday. A very good close was already been seen. It has reached its important neckline resistance at 1550. So yes, the structure still hint that there will be another leg on the upside, maybe towards 1700 to 1740, 1750 on the upside. But the risk and reward is not looking attractive at current level. If somebody has already bought it, then stay put. In terms of making a fresh entry, wait for a dip towards 1600 to 1620. Keep a stop loss below 1550. The structure still looks strong.
India, and it's anyone's guess whether the order that they've spoken about as well from their annual report, does that come in from a SpaceX or not? And if so, this would be the first Indian company to get its order from a SpaceX as well. So it's going to be interesting to see the developments that pan out from here on. But completely out of time. Thank you, Nilesh, so much for joining in. Thank you from Sharad, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबर शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबर शक्ति STTMT।
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal, and we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury, and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on
A spike in global risk aversion drags markets lower. The Wall Street spooked by escalating Middle East tensions, higher crude prices and continued foreign fund outflows. Metals, auto and realty stocks led the decline, while pharma and FMCG show some resilience. Meanwhile, oil prices surge, with Brent back above $97 a barrel. War premium returns to the barrel as fresh exchanges of fire between Iran and Israel threaten to unravel a fragile ceasefire. Gold, meanwhile, loses its shine as fresh Israeli strikes on Iran rattled a fragile ceasefire, while tensions in the Middle East are flaring again. Investors appear cautious, with bullion also extending losses despite the growing geopolitical uncertainty. And quick commerce platform Zepto is set to file an updated DRHP early with SEBI this week. The updated filing is going to be paving the way for investor roadshows and move the company closer to a July stock market debut. Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets right now. When you talk about Nifty 50 or Sensex, you're looking at them being close to the day's high, recovering quite a lot from the day's low as well. And when you talk about the move coming in, still very much in the red, whether you talk about Nifty or Sensex as well. But when you talk about the sectoral picture, that is also tilted in the favor of red. So it's actually metals, auto, realty, IT, oil and gas, financial services, energy and rural sectors, all of them on the back foot, as you can see on your screens as well. And among the major sectors, it's FMCG as well as pharma that are remaining a little bit resilient as we speak as well. Now, when you talk about the mid-cap indices, that's mid-cap or small-cap indices, both of them are just mirroring benchmarks right now. Let's also talk about some of the gainers and losers. Let's talk about the losers from within the Nifty 50 pack, and it's actually Wipro that makes it to the top of that list with that 6.5% knock coming in. Quality Walls, Interglobe Aviations, Eternal, Shriram Finance, Bajaj Finance and Jio Financial Services, some of the other stocks as well that are on the back foot. What's doing quite well right now from within the Nifty 50 pack is a Max Healthcare, Power Grid, some of your healthcare stocks, Apollo Hospital, and a bunch of other counters, the likes of Tech Mahindra, BEL, Bharti Airtel, and Sun Pharma doing quite good for themselves right now. When you talk about the mid-cap indices as well, is actually the healthcare names that make it to the top of the pack here as well, because Fortis Healthcare up about 3.5%, Alchem Labs, Glenmark, Mankind Pharma, all of those counters in great shape. So a bunch of those healthcare stocks, hospital stocks in focus as well and doing good for themselves from within the broader markets and from the benchmark indices as well. That said, let's also talk about the world of commodities that's very much in focus. Now, when you talk about oil prices, when you take a very quick look at the oil prices right now, you do have Brent that is hovering close to $97 a barrel. As you can very clearly see on your screens as well, about a 4.5%, nearly 5% in fact uptake coming in. And WTI as well, similar gains that you're seeing coming in. So you do have Israel and Iran exchanging some of those fresh spikes, and that's something that is helping the war premium really return to the barrel. Other than that, you do have the Red Sea trade route that is very much in the spotlight. Strait of Hormuz supply risks very much remain in place as well. Now, when you talk about gold as well, on the flip side, it's actually falling right now as we speak because the ceasefire is coming under strain, and you do have gold that has not been trading like a safe haven asset since the beginning of the war. It's been down quite a bit. The little bit of silver lining is that China's central bank is extending their buying streak, but that said and done, you do have gold losing shine despite geopolitical risks. Let's also get your check going in terms of what to expect from here on. In fact, Vandana Bharti, AVP Commodity Research at SNC Global Securities, joins us on the show right now. Vandana, a very good afternoon to you. First things first, wanted to try and understand what you think about oil prices right now. Given all of those escalating tensions, do you think that the war premiums very much returned to the barrel?
Yeah, of course it is there, and thanks for having me in the show. And again, it's an attack on petrochemical plants, so it is directly related to the crude oil prices. And again, dollar index, it is above $100 points. So safe haven buying, it is in dollar index, it is in oil right now, and the pressure it is on gold and silver and other commodities as well. So I'm expecting that $97, $98 could be the next level for crude oil if the escalation persists.
Absolutely, and there seem to be no sign of a let up here when it comes to the escalation as well. You see that very much in place as well. But when you talk about some of those Strait of Hormuz risks, they're still intensifying as we speak right now. So are you then penciling in higher for longer oil prices? What does your forecast really remain on the upside and the downside?
Yeah, if we talk about Strait of Hormuz, the normal transportations numbers were around 130 ships, 125 6 pre-war area. Now it is hardly 20, 15 ships they are crossing the Strait of Hormuz. So considering the supply side, I'm expecting that the prices should go level near the level of $100 to 105. Again, and 105 is very much in action because the option action in option in that particular strike, it is quite visible there. So yes, $100 is a very psychological mark, and before that it may see some kind of consolidation. But now for this week, prices should be on higher side, and there is no progress in peace talk, and we are not getting any kind of a statement either from US and Iran. So yes, the number should go on in crude oil prices, and in Brent, we can expect 102, 103 kind of level.
No, absolutely. All of that said and done, Vandana, do you think that the lower band of oil prices as well has been revised upwards ever since the beginning of the war? Because we're counting down to 101 days of the war right now. Some of our assumptions that were very much in place at the beginning, before the war even began, have really gone for a toss right now.
Yeah, clearly it has been moved up from $65 to $85. So it's a kind of rise of $20 in this just in 4 months. And if oil prices, they hit the level of 130 or 125 again, then the lower side, it may moved up towards the level of $90 to $92. And we have seen that within a time period of say 4 months or 2 months. So it can happen. And once it crosses the level of $90, it will create a chaos in the global economy. Already we are getting bad numbers from major economies, and it will make a bigger hole in the pockets of major importing nations.
No, absolutely. And speaking of hole in the pocket, Vandana, let's talk about gold as well. Talk about what that is doing right now. Do you think that despite this decline that we're seeing right now, do you think that the fundamentals are intact, or do you disagree with that?
I can say that there are two phases of this gold correction. We have seen 17 tons of buying by central banks in the month of April, but yes, we have seen the improved buying in the month of May. So while gold prices are moving down, central banks are aggressively buying and taking the opportunity of this correction. Maybe ETF buyers, they can take they are making new positions, and especially in European countries. So on one side, prices are moving down, but yes, ETF buyers and central banks, they are very much active on this counter, and I'm expecting a stepwise fall in gold prices towards the level of $4,100 to $4,150, which should be considered as very healthy correction, and it will be very attractive for a major aggressive buying for central banks. So for the time being, I'm expecting a correction in gold, and in Indian market it is like limited because of we know that the custom duty, INR prices and restrictions and all. But yes, it will lead like a larger aggressive buying by central banks as well as the physical buyers, jewelers buyers.
No, absolutely. That makes a lot of sense in terms of how you should be approaching it with the central bank lens as well. But back home in terms of markets as well, when you talk about fresh buys for investors, do you think that that's something, since you're talking about a step, wise decline in prices, do you think that fresh buys are attractive right now, or do you think investors should be waiting for dust to settle? Is there a timeline that you have in mind there?
Exactly what you said, that they are waiting for more correction, and see, $4,300 is it is a very fragile support for this commodity, and 4260, 4230 is quite visible on the chart, and next one is 4150. So investors or traders, they are waiting for a stepwise buying as well for this counter. So yes, buying has started. The data is showing from Europe and central banks, but yes, on lower side, buying will be more.
No, absolutely, and thank you so much, Vandana, for helping us understand all of that a little better when it comes to gold as well as oil prices. But all of that said and done, let's also move on and talk about West Bengal's capex push that is gathering pace right now with a sharp focus on electronics manufacturing and railway infrastructure. In fact, Sharath is joining in terms of listing down the various announcements when it comes to companies, and it's quite the interesting set, Sharath.
Well, yes, it's been 1 month since the new state government has come in, and we had mentioned it earlier. And now the announcements have started coming in, and the listed plays are also showing a good momentum in the West Bengal's infra push. Now, of course, over the last 2 to 3 odd days, interesting announcements have been coming in. Keep an eye, especially for Dixon Tech, Sirma, Amber Cairns. Largely, there is an electronics manufacturing policy at play. It's expected to be expanded, and they would be leveraging the 2 clusters which are there in West Bengal, especially in this EMC conclave. The names, of course, are Nai, Hati and Falta. These are the areas in West Bengal where they are looking for interesting expansion in this space. Apart from this, railway stocks are also in focus, especially the wagon-related manufacturers. A 1 lakh crore railway infra project is being made. There's Delhi Siliguri bullet train, Kolkata metro expansion, east-west dedicated freight corridor. Of course, this includes your Titagarh Rail Steel, Jupiter Wagon, RVNL, to name a few. Indian Railways is also planning a 40,000 crore wagon order as well, and this is largely coming in from the companies which are based out of West Bengal. Infra-related companies, JSW Infra recently came out with its exchange filing where they have operationalized Berth 7 at Netaji Subhash Dock, which is located in West Bengal. Also, they have secured a 832 crore order from container terminals. Shah Metalics has committed roughly 10,000 crore worth of ongoing capacity expansion as well. So over the last 1 odd month, we are seeing interesting infra-related push happening and a lot of announcements coming in. NBCC, there is a fencing, which is where the pending orders comes in. Also, Bata has announced expansion in the eastern region. And of course, CSC is also another stock where the state government approval has come in for the long-term procurement. So a lot of things are happening in West Bengal. And of course, we will be giving you all those details as and when they come.
No, absolutely. And Sharad, you had preempted a part of this infra push really coming in when you went to Kolkata to cover it and talk to us about some of those ground reports. Some of the managements also actually indicated this. So that's +1 for you if you've been tuning in to NDTV Profit. That said and done, thank you so much, Sharad, for joining us with that update coming in. Let's also put the spotlight on Amazon that is stepping up the quick commerce battle in a big way. Talking on rivals, Blinkit, Instamart and Zepto, the company in fact plans a massive $35 billion investment over the next 5 years, backed by an aggressive expansion into new cities, thousands of micro-fulfillment centers, and a strong AI push to really fuel growth and exports from India. Let's listen into a slice of the conversation that Tamanna Inamdar had with Sameer Kumar, the country manager for Amazon India.
I was speaking recently to a high-level executive in the quick commerce space, and as one does, I was asking, so what's happening in your space, so much competition, etc. What do you think about Amazon and Amazon now? And his answer was, still some time ago, we weren't really looking at it seriously because even though Amazon is large, it wasn't moving fast in that direction. Now that they seem to have got their ducks in a row, we have to really watch and see what they do. Does that, from a potential competitor, does that sum up what's happening in a sense that Amazon has finally arrived at the quick commerce party?
I think I would not focus as much on competition. We always focus on our customers. And what we have spent so far is spend time building the right offering for our customers and get to the next 100 cities and 1,000 micro-fulfillment centers. We have tried to enable the widest assortment, the safest possible operation, and at the same time, do it with the safest fulfillment centers or the micro-fulfillment center that we have set up. We believe that in the near future, we will have the largest selection or the widest selection at the fastest speed for all our customers around the country. And if we do that, there's no reason why we shouldn't be winning the speed game while we continue to win on the selection as well as the value game. And that's what we are here for. So I do believe that we have the momentum and we really like what we have built so far. Our business is growing 25% month over month. And prime customers, which is our big differentiator, are shopping 3 times more frequently with us. So it's really exciting to see what we have built. But as we say, we are still in day one of our journey in India. And we remain excited about what's coming.
Yeah, no doubt about it. And this is something that Andy Jassy also said in the Q1 numbers. He spent some time talking about Amazon Now and about Prime. Quite exciting. But I have to ask, Amazon's been in India 13 years, global giant, right to win, some would say, first mover advantage. So I reiterate my question and forget about the competitors here. It's my question. Why so late to the party? The quick commerce fight was here, the battle was here to win long before the other people came on board.
I think it's not about being late to the party. We are in the party and we are here to win. And as we said, it's still day one for e-commerce, for online commerce around the world. E-commerce penetration around the world is less than 10-15%. In India, it's about 10-15%. So even for the speed offering of minutes delivery, it's early days. We have, and there's room for growth as we are seeing with our prime customers. They're liking what we have built. So I don't believe we are late. We have started our journey and we love what we are building, and we remain excited about what we're going to deliver for our customers in the coming months and years.
Yeah, when we hear and see in the media and an Indian company saying that we can outspend Amazon if you need to, and there's a published quote in the papers, there are 2 thoughts come to mind. One is how India has, in a sense, become the hotspot for this model of e-commerce delivery. And second, how the market is large enough to give space for an Amazon as well as local players to exist. How do you look at the landscape?
I think, first of all, you're right about the last point, that commerce or online commerce is going to be a very large segment. And and there is place for multiple players. We focus on our business, and we'll continue to build what is right for the Indian consumer. We have always prided ourselves on having the fastest speed, and we'll go ahead and do the same thing for our minutes delivery offering and make sure our prime customers get disproportionate value out of that.
Is there a question at all on cash burn, profitability, those metrics? Because this entire space is also looked at from that lens. And of course, for listed players in the Indian markets, it's a whole different ballgame, right? Average order value, gross order value. I'm just curious to know how you are approaching it right now.
I think we have always taken, for us, it's never been an either or. It's not growth or profitability. It's growth and profitability. So we have always taken that approach. In the current scenario, as we are scaling up our business, are we investing in India to build the speed offering? Absolutely. But do we keep track of all the profitability markers that we need to achieve? That also we are doing. Our startup team that's building this product and services, they are focused on execution. But as a leadership team, we look at it and say, as we build the business, as we scale our business, are we hitting those profitability markers? And to be very honest, for our first set of stores, we are very happy with the performance that we are delivering. And overall, as an Amazon India business, we are hitting our profitability markers as well. So it's never been one or the other. It's the both, and we are delivering on both.
Can I delve a little bit into that last point when you say that as a business, Amazon India is hitting its profitability markers? Because that's a bit of a hard goal to reach in a business which is still in a space which is still establishing itself. I'm still talking about quick commerce here. How are you doing it, and what color can you add in terms of any kind of details of those profitability markers?
I think, like, as you look at it, this business at retailing or e-commerce is a business of scale. As we scale our business, we get a lot of leverage. If you look at our flywheel, we lower the cost as we get scale. And so our goal is to first grow the business and become large, especially in this speed offering. As we improve our order density, as we get to more customers who are shopping with us, we improve frequency, as we called out, as we add more assortment, the average order value goes up. All of that will help us accomplish that, and we keep track of that, and we are happy with the progress that we make.
What is the strategy here? Is it more speed, or is it more size of inventory as far as this part of the business is concerned? Do you want to go wider, or do you want to go deeper?
I think, why do I have to pick one or the other? It's not an either or in this case either. Like, we want to offer the widest selection at the fastest possible speed, and that will be a differentiator for Amazon. We have always prided. Selection across speed has always been our offering. So when we offer minutes delivery, we're going to offer that too with the widest selection that's possible in those micro fulfillment centers. And then we'll take it to the hour and the day delivery. And all of that will be available to you. Like, as a customer, if you're making your last minute purchase or you forgot a gift you buy, you can buy that on Amazon now. But if you're planning a party at your home for the kids that are coming for a birthday, we'll have all the assortment that's from party supplies to balloon to utensils and all the other things that you need, including the return gift for your kid. We'll have it for 50 people that comes to that party, and that will be only available at Amazon.
What do you think is the next stage then? Right now, Amazon Now, Minutes is new and exciting, Prime is exciting. As you look at over the next 12 to 18 months, Samir, what is seizing your interest, apart from, of course, wanting to see all of these current projects through successfully?
I think it's continued to be the same. We want to offer the widest selection at the best possible value and the fastest speed. That continues to be our game that we'll play. Along with that, we'll continue to augment our Prime offering. We are also working on our low value selection, getting our penetration further into smaller cities. We have just announced investment of 2,800 crores rupees in our operations to expand our operations in set of cities. We are building fulfillment centers in tier 2, tier 3 cities. 70% of our Prime customers, new Prime customers, are coming from these smaller cities. So we're going to invest in Bharat more than India as well. So we're going to continue to do both. In terms of other investment, we're going to be big focus on AI, as we are going to improve our shopping experience and our selling experience, because our sellers will get It'll make it easier for them to sell on Amazon. We're going to make it easier for customers to buy on Amazon. And we're going to continue to invest in our tools and services.
You know, why is India at that focus right now, Samir? And I want to ask you a broader perspective. From Amazon's focus, where does India stand in terms of a market size, even an export platform for the rest of the world? For the longest time, India has been that story which is growing. Do you think that we've reached, after 13 years, from Amazon's perspective, that tipping point on where India is beginning to matter at the global table as well?
I think it continues to be, as we said, it is still a day one for us in India as well. We are very long-term focused. As Jeff called out a few years back, 21st century is India century. And we believe in that. Our leadership believes in that. So we continue to remain invested in India. And that's why we have pledged another $35 billion in the coming 5 years. So it remains an important locale or marketplace for us, along with our investment in AI and data centers. So India is an important place for us and will continue to be important in the coming days and years.
And there you go. So that's the word coming in from the country manager of Amazon as well, who's highlighting very clearly that $35 billion investment over the next few years, the AI push and the Tier 2, 3 city expansion as well. But that's all the time that we have on the show for now. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal. And we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a time